à tous. Nous allons maintenant débuter. First, let me introduce myself. My name is Daniel Prudhomme, and I am vice-président à l'innovation et à l'administration à Revenu Québec. Il me fait plaisir, avec mon collègue Éric Maranda, qui s'adressera à vous dans quelques minutes, de vous souhaiter, au nom de Revenu Québec, bienvenue à ce séminaire sur les chaînes de blocs et la taxation. With my colleague, Éric Maranda, who is going to speak to you in a few minutes, it is my pleasure for Revenu Québec to welcome you at this seminar on blockchain and taxation. But what is Revenu Québec? In a few words, it's the autonomous fiscal agency of the province of Quebec, located up in Canada, just over Maine, Vermont, and New York State. Thanks to the majority of our ancestors, you will find in Quebec a taste of France, Paris, Bordeaux, Saint-Malo, with culture, romance, good food, and wine. L'événement d'aujourd'hui est organisé par le Réseau sur la taxation de l'économie numérique, auquel le Centre de recherche de Revenu Québec a adhéré il y a quelques mois. Le réseau est basé à la WU University, à Vienne. À cette dernière et au Digital Economic Taxation Network, merci pour votre accueil chaleureux, votre invitation à organiser ce séminaire et pour l'aide apportée à cet égard. Merci également à tout le personnel de Revenu Québec qui y a contribué. In conclusion, I warmly thank Audit members and its leader, Mr. Jeffrey Owens, for their welcome in the DET family. And I am giving now the floor to Jeffrey. Thanks, Jeffrey.
Thanks, Danielle. And you listening to your description, it's a real shame we can't have this meeting physically in Quebec, but let's hope we can get to that, in fact, next year. So I'm Jeffrey Owens. I head up the Global Tax Policy Center at Vienna. And let me first thank our colleagues in Quebec Revenue, in fact, for hosting this Digital Economy Tax Network event. What is the DET? Essentially, it's a network of international regional tax organizations and 10 leading research institutes around the world. Yes, what does it do? Policy relevant research, provides a neutral forum for dialogue between business and government, and then feeds the outcome from that dialogue into the standard setting bodies like the UN, like the European Union, like the OECD. Yeah? You've seen the agenda for this half-day workshop. It's an ambitious agenda. There's a lot to get through. I encourage the speakers to respect the deadlines that we've set for them in terms of time, and I will be reminding them 1 minute to go, so they'll have to finish on time as well, yes? The format that we have today is that Don Tapscott will kick off with an overview of where we stand on blockchain today and what we can expect over the next few years and how this may affect taxation. The subsequent sessions will then build on his presentation and explore, both from the perspective of government and business, how blockchain has the potential to transform, to disrupt our tax systems. That session will then be followed by a session on illicit financial flow. So we begin to broaden the horizon, looking at, in fact, of the role of technologies in counteracting money laundering, bribery, corruption, tax evasion, illicit activities, in fact, that are costing the world billions of dollars every year. We'll then switch tack and we'll have a presentation on the experience of 2 large multinational enterprises on how they're using blockchain to get better compliance both in the trade and in the tax area. And then finally, in session 4, we'll look at a number of blockchain experiments that are being carried out around the world, which will show you, in fact, that blockchain is a reality, it's coming in, it's being mainstreamed. Yes? This workshop is part of a series of events that the DET has been organizing. It will be followed up by a number of other events over the next 12 months, and those events will then lead into a major conference hosted by Quebec Revenue in June 2022. What are we trying to achieve with this meeting? Yeah? I think from my perspective, the main objective is to show the tax community that blockchain is emerging from being a plague child of a small group of young and not so young blockchainers to being a technology which over time has the potential to transform the way that our tax systems operate. Yes, it will be disruptive. Yes, there will be pilots that will fail. But now is the right time, in fact, for tax administrators, policymakers, businesses, both large and small, to come together and to collectively shape the developments in the technical area so that they meet the needs of the whole tax community. This is the approach that's being adopted in other areas. For example, in the environmental area, in trade, we tax people must adopt the same approach as well. Just a few words on the logistics of the meeting. With such a large audience, and there are something like 450 people online from 63 different countries, so it really is a global event. It will be difficult to have a sort of an interactive live Q&A session, but you will have the opportunity of putting questions in the chat show. We'll try to pick these up, and ones that we don't pick up, we'll try to answer subsequent to the close of the conferences. So I would encourage you to use the chat show. All the documents and the slides will be available on the website at the end of the conference, so you'll be able to see them there. The website will also be have probably in a few days' time a video, and I would encourage you to share that video amongst your contacts. And also, it will, in fact, we will be using Twitter. You've seen the hashtag there. It's Future Tax Tag, so we encourage you to use Twitter to put your comments on the conference and the way it's operated. The website will also have an evaluation questionnaire, and when you go in to look at the slides and the presentations, if you could take a few minutes to complete that questionnaire, that would be very much appreciated, yes? So with that, I'll pass the floor back to Eric. And I suppose we should also say, Eric, congratulations on you are now the new Vice President of Innovation in Quebec Revenue. Over to you, Eric.
Thank you, Jeffrey. Distinguished guests, good morning. It's an honor for me to be here with you today. I'm proud of Revenu Québec's role in this event, which, as you said, Jeffrey, has attracted more than 400 attendees from 65 different countries around the world. Your participation, despite the global pandemic, will allow your organization to improve, to be more open, and to share expertise. The partnership between DET and Revenu Québec is a proof of the action our organizations are putting forward, as well as our drive for constant innovation. Revenu Québec is therefore proud to have helped organize this virtual event. Our contribution shows that we're committed at Revenu Québec to key international issues. As you said, Jeffrey, before, this event today is just the beginning. The reason why we see an image of Quebec City is that I'm pleased to announce that Revenu Québec will be hosting the next DET annual meeting in Quebec City, Canada in June 2022. Details of the meeting are being finalized, but I can tell you that we want this meeting to be held in person. It will be, we hope, a physical meeting. It will be a perfect opportunity to discuss important issues, share our expertise, and expand our networks. We are already hard at work planning this event, and more details will follow in the coming months. Until then, I'd like to thank you all for being here today with us, and I wish you an excellent meeting.
Thanks for that, Eric. Well, with that, we can start the conference and move on to our first session. And I think we're all very excited and pleased, in fact, that Don, you could take the time, Don Tapscott could take the time to be with us today. I think it's fair to say, Don, that you are a true blockchain pioneer. You've traveled around the world, you've talked to presidents, prime ministers, finance ministers, trying to convince them that blockchain has the potential to make our democracies more effective and to make the way that governments interact with citizens more productive, yes? So we're all looking forward very much to your presentation. You have 45 minutes. You have 45 slides. That's quite a challenge. And I think what would be appropriate is you could take about 30, 35 minutes to go through the slides and then leave us 10 minutes at the end, because I'm sure we're going to have a lot of questions on that. So with that, over to you, Don.
Okay, merci. Thank you very much, Jeffrey, and it's great work that you're doing. And I'd like to give a tip of the hat to Danielle and all the hard work in organizing this. Danielle's been a good friend for a long time. J'aimerais faire cette présentation en français, mais rapidement les francophones ici me demanderaient de la donner en anglais. So I'll stick with English if that's okay. I hope that you're all well and safe. And the global pandemic is really one of those rare turning points in history. And this is creating a demand pull for change. It's demanding profound changes in our economy, our behavior, our society. Some leaders and governments that have failed will be replaced or have been replaced. Our supply chains, our systems for health data, public health, many other institutions are being scrutinized carefully and will be changed, hopefully for the better. And governments too, even as Eric referred to, the legitimacy of our democracies have been challenged. So we're all having to think big, and we're all having to change. This demand pull is meeting a technology push. The pandemic has sped up many trends of the digital age by years or even decades, as the nature of work, retail, entertainment, education, healthcare, others are being transformed. And there's also a new era of technology emerging, and one that, in my view, makes the last 40 or 50 years of the digital age, the digital economy, seem quite trite. So my view is that tinkering moving forward is not going to work. We need to make some profound changes to our public institutions. And today I'm going to talk about one of those, how our systems for funding a government and our systems for taxation. And I'll be discussing, I'm just getting used to the system here. I'll be discussing a number of topics. I'm going to introduce this idea of the second era of the digital age, and just spend a couple of words about the state of the union regarding blockchain overall. Then I'd like to share some of our research on blockchain applications in taxation, and share also some additional opportunities related to tax. I'd like to talk to you frankly about some of the constraints and implementation challenges, and talk to you about how are we going to make this happen? How will we achieve the leadership for change? So let's begin. The DET, as some of you may know, I did coin the term the digital economy in my book, The Digital Economy, in 1994. And when I was asked to write the anniversary edition, I had to think about where have we been and where are we going? And I came to the conclusion that we've been through a first era of the digital age: mainframes, mini computers, PCs, the internet, the web, social media, the cloud, big data. And now we're entering a second era where basically technology is infusing itself throughout everything. The physical world is becoming smart. Devices will be collecting taxes. Where we have technology that learns to do things that it wasn't programmed to do. And I found myself coming to a surprising conclusion that the foundational technology for this next era was, in fact, the underlying technology of cryptocurrencies or blockchain. And we came to the conclusion that this really represents, blockchain, the second era of the internet. For 40 years, we've had an internet of information. But if I send you some information, a PDF of this deck, I'm actually sending you a copy. And that works great for information, but it doesn't work well for the things that tax authorities care about, which is value. Things like money, assets, intellectual property, the data in our identities, deeds, contracts, invoices, bills of lading, cultural assets like art or music. If you don't want someone copying your identity or your vote, and if I send you $1,000, it's to a tax authority, it's really important that I don't still have the money, right? So cryptographers have called this the double spend problem for a long time. And the way that we manage this problem in our society is through intermediaries. Banks, governments, stock exchanges, credit card companies, now social media companies, various escrow agents, transfer agents, and so on. Each of all the counterparties in our financial system. And overall, they've done a pretty good job. Their job being to identify the asset, that's $1, identify the party, that's a taxpayer, clear and settle transactions, and keep records. But there are growing problems. These systems are not secure because they're based on central servers, and there are two types of these servers, those that have been hacked and those that will be hacked. The financial institutions have all kinds of problems. They exclude a couple of billion people from the global economy. They capture our data, which is a big problem. It means that we can't use the data to plan our lives, that there's a growing asymmetry where a small handful of companies own the asset class of the digital age. We create the data, but we can't monetize it, and our privacy is being undermined. There are many other problems. It takes too long. Why does it take 4 to 7 days for a housekeeper in Toronto to send money to her mom in Manila? And why is she charged 10 to 20% for that? So what if there were not just an internet of information? What if there were an internet of value, some kind of vast global distributed ledger where anything of value from money to securities to intellectual property could be stored, managed, transacted in a private and secure way, peer-to-peer? Well, that's what Bitcoin started. Satoshi Nakamoto cracked the double spend problem. And now, for the first time in human history, we have blockchain, and people can do transactions peer-to-peer. And trust is not achieved by an intermediary necessarily. It's achieved by cryptography, collaboration, and some clever code. Now, I had a very clever analogy, I thought, explaining why a blockchain was much more secure than a traditional centralized server. But John Oliver, an American late-night TV, got a hold of it and had some fun with it. I'm just going to play you this 1-minute clip now so you get the idea.
Because of the complicated process the network uses to verify records, it is very secure. Now, relax. I'm not going to get into what that process is or how it works, but I will share a really helpful, really dumb metaphor for why it is safe.
The way I like to think of it is that a blockchain is a highly processed thing, sort of like a chicken McNugget. And if you wanted to hack it, it'd be like turning a chicken McNugget back into a chicken. Now, someday someone will be able to do that, but for now, it's going to be tough.
Hold on. That is an absolutely horrible thought. So why is that reporter so happy about the idea? Because if anyone ever figures out how to turn a chicken McNugget back into a chicken, that chicken is going to be up. He's going to spend the rest of his life suffering from PTSD and writing haunting poetry about the experience. The things I saw, buck, buckaw. My body is whole, but what of my soul?
My body is whole, but what of my soul? So you can see why I don't use the analogy anymore, although I still think it's a pretty good one. So Bitcoin was to the Internet of value as email was to the Internet of information. It was the first app. But now we have general purpose platforms where you can build any app, kind of like the web, Hyperledger, Ethereum, some of the exciting new platforms that are emerging, Cosmos, the Internet of blockchain, linking blockchains together. So this is an extraordinary time. This is 1994, 1995, and we're about to see, we're in the early days of a huge wave of innovation. Digital age is entering a second era. Now, there's lots of controversy about, well, how big a deal is this? I think it's a big deal. And I don't want to spend time on this. This is a table of contents from a whole other 1-hour presentation that I'm not going to go into. But these are 10 of the 20 industries that we're studying at the Blockchain Research Institute. And in every one of these, there are very profound changes that are underway. And many of these changes have been stimulated by the pandemic. So normally people think about financial services, and for sure, this is a big opportunity. You know, you tap your card in a Starbucks and a bunch of messages go through half a dozen counterparties, and 2 or 3 days later, a clearing and settlement occurs and somebody gets paid. Well, if all of this were based on a distributed ledger, if we had a smart payment system, There would be no 3-day settlement period because the payment and the settlement would be the same activity, be a change to the ledger. We could have smart payments. We could have micropayments. We could have real-time settlement. We could have payments inside smart contracts and so on. So the opportunities are quite huge. Now, what about tax? Let's get into it. Well, I'm going to start, I'll talk about a number of areas of tax, but let's start with income tax and payroll tax. So digitizing tax information has been picking up speed for a while now on a global scale. We've seen the introduction of solutions like SAFT, SAFT, an international standard for the electronic exchange of reliable accounting data from organizations to a national tax authority or external auditors. And this is a standard that comes from the OECD. Brazil has introduced real-time electronic invoicing. There have been lots of initiatives, but payroll tax is now in need of a big design. It involves all of these multiple institutions holding their own registers, in effect causing duplication of data. These are all collected by different entities simultaneously, and it's a classic sort of blockchain opportunity where we can have a single version of the truth and real-time settlement. And we have an opportunity in the tax industry due to the ability of blockchain to provide real-time information extracted from multiple layers to a large audience around the world. By implementing a blockchain-based solution, we can create an environment where employers no longer have to act as intermediaries. They would not be responsible for calculating and transferring tax, Social Security payments, information about employee salaries to relevant institutions. So this could be a big boon. Employer, and here's the way that it would work. First of all, if I can just get my cursor here. So the employer would input the gross amount of a salary into the system. And with the blockchain system, limited only to tax administration, banks, other necessary parties, tax data is matched with the payment by a smart contract and calculates the tax and Social Security payments. And then thirdly, the net salary is automatically transferred to the employee's account and taxed to the government. As a result, the payroll tax process can be faster, less costly, cash flow more efficient, and many other benefits that I'll get to in a second. So, well, actually, I'll say a couple of things about it now. So, if we did something like this, this would obviously significantly reduce administration burden on companies, reducing the cost of accounting services. It would reduce mistakes. Would save time through real-time transactions, high-speed money transfers between government and business. Smart contracts could make transacting tamper-proof and transparent. We could have improved security through cryptography, reducing the risk of fraud that Jeffrey was talking about earlier. Authorities could have appropriate and immediate insight into a company's finances. It would remove the burden of VAT calculations and invoice the level of that amount due on a tax return, and many other benefits like that. Okay, so that's sort of payroll. What about VAT? I started to talk about that. So this is another area that's ripe for transformation. So that is a key factor in tax administration. It's a major contributor to lots of governmental budgets. Countries all over the world are searching for ways to increase effectiveness of VAT collection due to increase in order to increase revenue and shorten any budget gap. And again, there have been some interesting examples that have come up. Countries like Hungary has plans in implementing real-time reporting solutions. The Ministry of Finance in Poland is working on everyday reporting of JPK, VAT, electronic reporting based on the OECD's SAFT. And the EU VAT system is going through a major reform proposition. And Brazil, as I mentioned, is very advanced, implementing mandatory electronic invoices by tax authorities in real time. And there are big problems with the current system. It relies on business themselves to correctly calculate the amount of that and submit that to tax authorities. And this is problematic, of course, when tax returns and settlements are calculated over a fixed period, monthly or quarterly or something like that. And they're based on arbitrary dates, like invoice dates. And for governments under the current structure, a reliable tracking of VAT payments is almost impossible. And internationally, each country maintains its own ledgers, obtaining historical data on VAT unreliable. So how could a blockchain help this? Well, here's how this system would work. First of all, client pays the invoice to a company. And then a smart contract calculates the invoice VAT and divides the non-VAT and the VAT part. And then the VAT part is paid to the tax authority, and the non-VAT is transferred to the company's account. And finally, the company pays their supplier invoice through a smart contract. And the smart contract, once again, calculates the VAT, which is sent to tax authorities. Again, this could administrate the administrative burden on companies, reduce errors, help reduce fraud, evaporation and spillage, and all the other things that happen. So what about customs and trade? Well, this is another big one, and it was alluded to in the introductory material. Global trade, all kinds of problems in terms of tax collection that create huge opportunities for blockchain. So think about it. You got trains and boats and planes and trucks and materials moving around and crossing borders, and there are tax authorities in multiple jurisdictions and all kinds of agents and intermediaries, and all of this is moving using EDI and ERP and traditional computer systems, and there's paper and emails and telephone calls. What if there was a shared network state, a global real-time ledger, where all of this global trade finance was managed, and where appropriate taxes were paid automatically through smart contracts? We could have a single version of the truth, a shared ledger that tracks all kinds of data, documents, provenance of import-export goods. You could have a digital ID solution built into it that associates activity with a person or company automatically. We could have provenance. You could use a ledger to track trade goods from farm to table or manufacturer to consumer, automatically flagging potential contraband or violations at the border. Once flagged, you have a perfect trail of goods moving from checkpoint to checkpoint to see where something went missing or something bad was added. I interviewed Fred Smith, who is the founder and CEO of FedEx, and he said, we transformed the logistics industry using traditional technology. We're going to do it again using blockchain. And he says, we came up with the idea of knowing the chain of custody, but now we'll not only know where a thing is, we'll know about a thing and everything surrounding it, its temperature, and so on. So this could be a big deal. Another one of the benefits is automated settlement. The same ledger could facilitate payments automatically. Using smart contracts, a trade platform could automatically exchange currencies from one into another. Foreign exchange is a huge cost in all this. It could settle debts, fees, dues, facilitate the purchase of sales and goods. So this is an historic opportunity. Now, another set of opportunities come about through triple entry accounting. Double entry accounting is really the foundation of the corporation and of capitalism. Rose up to prominence in the Renaissance, and up to that point in time, it was very easy to cook the books. double entry accounting established new practices to fight this. And every entry into an account required a corresponding entry into a different account. One side's the debit, the other side's the credit. And that was a big boon. Well, with blockchain, we have this extraordinary new thing called triple entry accounting, where we can have a real-time balance of transactions. Imagine a system where you could ensure the integrity of vital tax data, issue payments easily from account to account, and provide an added barrier to preventing tampering from malicious actors, including in an age of increasing cyber attacks. And you could be sure that the books weren't cooked from one government to the next, something not so applicable in Canada, but valuable to some developing nations with a history of corruption. You could instantly find out what benefits were paid, who they went to, whether taxes were paid, whether they were not paid. And, you know, Canada has an auditor general that comes in and looks at all the activity of government. And every year, after 14 months later, the auditor general finds some problems. Well, with triple entry accounting, the audit would be real time. You wouldn't find a problem 14 months later. You'd find a problem on Tuesday at 2:30 in the afternoon. And this could be an extraordinary thing, which could really transform the whole business of auditing. So those are a few of the activities in different areas of tax. Let's talk about some additional opportunities. So, whoops, I got ahead of myself here. So the very first one is that some jurisdictions have adopted paying taxes with crypto. This is a sensible thing to do. People have cryptocurrencies. Why shouldn't governments accept them as a form of payment? Now, there are lots of implementation challenges in doing this, but this is peer-to-peer payment, allowing near instant clearing and settlements of payment. Ultimately, we need national payment systems that are digital, and there are a number of countries that are working on that. And we need central bank digital currencies that would increase this. And I'll get to that in a sec, transform this. But for now, why not do what the state of Ohio is doing, enable people to pay their taxes in Bitcoin? Now, sure, in the discussion we can talk about implementation challenges. Bitcoin doesn't have a stable price. It's not a stable coin and so on. But these are not reasons to not do it. These are implementation challenges. Now, a second set of opportunities has to do with the opportunities to generate new revenue. Now, let me come at this from a couple of ways. Where was the Internet of Information based in the world? Well, it was based in Silicon Valley. Where is the Internet of Value going to be based? I think it's bigger than the Internet of Information. I don't think it will be Silicon Valley. And there are many regions around the world that have created an appropriate regulatory environment where they've built massive ecosystems of thousands and tens of thousands of people. And so this is a key issue of policy for any government. What can we do to create the conditions whereby the Silicon Valley of the digital age might happen in our country? And there are lots of exciting things that can be done. So I'm just going to mention one right here that I think could work very well in many countries. It started in Canada. It's a unique Canadian tax innovation, and it's called flow-through shares. And the use of these flow-through shares fueled investment in Canada's mining, oil and gas, and renewable energy sectors over the last past century. And this is now the biggest R&D center in the world in these industries. This could be applied to technology, blockchain, AI, and this next era of technology. That has not been done in Canada, but it should be, in my humble point of view. And a flow-through share is a special type of common share that allows eligible companies to flow through certain expenses to holders of the share. And those investors can claim these expenses as tax deductions rather than the company deducting them from profits, because startups almost never have profits in the first place. And they can benefit, they can't really benefit from tax deductions. So by applying this tool to the technology sector, we estimate that in a country like Canada alone, we could generate more than $1 billion right from the get-go in new technology R&D every year. That's one of many things that could be done that we're looking at the Blockchain Research Institute. Now, so that's the technology sector and building it. Obviously, if you have a strong technology sector, that will generate tax revenue. But technology is not just a sector, it's the foundation of all sectors. And there's a big opportunity now to ensure that this technology gets applied to the transformation of our supply chains, of our financial industries, of our health systems, of our manufacturing. And tax authorities need to think not just about how do we collect tax, we also need to think about how do we create an innovation economy that generates prosperity and wealth so that we may have taxes and revenue for governments to be able to collect. So those are three initial opportunities. There are more. So blockchain can help us build a better government, more effective government. And, the Internet of Information had relatively little impact, I think, overall in government operations. Governments still function pretty much the way that they did before. But now we have an Internet of value that can change the way that we deal with key things in government, which is assets. We can also strengthen our democratic institutions. There is a crisis of legitimacy of democracy. In the United States, a third of the population thinks that the election was stolen. And all around the world, democracy is in a lot of trouble. And technology is not going to fix that. It requires humans to fix that. But with blockchain, there are many exciting things that can be done, and I've written about these quite a bit. We could not only have online voting, no one's going to vote online and trust it unless you have cryptographic proof that the double spend problem has been solved, that your vote was cast for the person for whom you voted, and it can't be moved or altered in any way. Only blockchain can provide that assurance to a voter. But that's just the beginning. Why not have smart votes? Why not have a vote inside a smart contract where you're voting not just for the voter, you're voting for their program. And if the program isn't implemented, then the smart contract has consequences. Maybe the person doesn't get paid, or maybe money doesn't flow, or maybe they're sanctioned, or maybe there's a recall. And then the final one is that we have an opportunity to reinvent the central banks. Now, China, of course, is moving most quickly on this with its central bank digital currency. This is making the dollar, the RMB, the euro, the peso, an actual digital currency. And to do this, there are huge benefits for central bankers. They can have complete transparency into how money is being spent. You put more increase the supply of money, what's happening? Are people investing? Are they saving? Are they spending more? You can have a lighter touch on regulation using transparency as a way of ensuring integrity in financial markets and other areas, as transparency and sunlight is the best disinfectant for fraud and for inappropriate behavior. There could be all kinds of benefits. Now, China is the leader in this, and they're rolling out their DCEP, their central bank digital currency, across One Belt, One Road, linking Hong Kong and Rotterdam into Southeast Asia, into Africa. They will replace the US dollar as the currency of record, unless the United States wakes up. And then Mark Carney, the former head of the Bank of England, a good Canadian, he's now back in Canada, posed the idea of why don't we go back to Keynes and Bretton Woods and have a global currency, a synthetic hegemonic cryptocurrency. So that's a big opportunity as well. And then the final one I wanted to mention was the notion of identity. So we have a big problem here when it comes to identity. Now, for tax authorities, it's not just, in my mind, it's not just central bank digital currencies. It's not just identity, the identification of a taxpayer, but it's identity in the broader sense. And right now, we sort of have this funny digital feudalism where we create the data, the asset class of the digital age, the foundation of all wealth. It's created by citizens, mainly. But it's captured by a group that I've called for a couple of decades now, the digital conglomerates, a new species of business that is increasingly, the problem's not that they're monopolies, the problem is they own the economy increasingly. And the virtual you may know more about you than you do because you can't remember what you bought a year ago or paid a year ago or what tax you filed a year ago or what you said or your exact location or what medication you had or what diagnosis you had or what you got on a test. You create the virtual you. It's captured by others. You can't use that data to plan your life. It's not secure. In, say, a pandemic, when we have a need for social purposed data, that data can't be aggregated because it's all in individual silos and a lot of them privately owned. It means that that our privacy is being undermined. And people say to me, well, Don, privacy's dead, get over it. You know, if you have nothing to hide, what's your problem? I think this is stupidity. Privacy is the foundation of freedom. And we need to get this data back so that we can manage it responsibly. It's now time, and I'd like to appeal to all of you to champion this idea for a self-sovereign identity that's owned by citizens. And of course, governments have a legitimate interest in a lot of that data. For example, the personal income data and the amount of VAT you pay and so on. So, but this is a movement that's unstoppable. And now is the time for tax authorities and strategists in this area to get on top of this issue and to figure out how we are going to interact with this movement to create a sovereign citizen identity.
Don, if I could ask about another 2 minutes, yes, so we have some time for questions. Will that be okay?
I can do it in another 5. That's what I was given.
Okay.
I've spoken for 29 minutes. I'm going to go to 35, okay?
That's fine, Don. Right. Yes, thanks.
Thanks. So these are 10 transformations that are underway. Big applications in taxation with income tax, VAT, custom trade, triple entry accounting. And there are also all these additional opportunities. Let's enable payment of taxes with crypto. Let's work to use blockchain and this technology to generate prosperity that can generate wealth. And let's move towards these big transformations. The transformation of government, democracy, central bank digital currencies, and identity management. What an unbelievable time to be alive. And why would we do all this? What would be some of the benefits? Well, I've just thrown them up here on the slide, and I am running out of time, but we could eliminate tax fraud pretty much. We could include a whole bunch more people in the global economy, 1.5 billion, almost overnight. We could have real-time auditing. We could have high metabolism supply chains and trade finance where there was a single version of the truth and real-time settlement. It would be enormously convenient. Overall, the consequences of safe, secure, and appropriate transparent blockchain technology and innovations could be applied to government and to taxation, increasing revenue and overall strengthening the legitimacy of government. What an unbelievable set of opportunities. So I'll say a word on constraints. Yes, there are lots of so-called implementation challenges here. We have, there are technical challenges. The technology's still relatively immature. We need blockchains to integrate together, and there are issues with user interface. For every government, there's a big legacy problem. The way I describe this is God may have created the world in 6 days, but he didn't have an installed base. We have massive traditional systems for collecting tax, for accounting, for auditing, and so on. And over time, these need to be changed. There are cultural legacies. How do you convince people that this is a new opportunity? I'm sure you'll be discussing it more. How do you achieve consensus, not just within your government, but across different levels of government in your country? And ultimately, we're going to need new standards globally. It's a big role for the DET in establishing that. You know, again, Fred Smith at FedEx says blockchain's a team sport. We used to be able to just build a system, put our logo on it, and take it to market. Now we need to transform an entire industry, and we need to work with everyone, including our competitors. Regulation all around the world is the #1 impediment to all of this moving forward. And think of the regulatory unclarity. In many countries, you do a token generation event, the tax authorities may say, well, you've just sold something, and that's a taxable event. Whereas the securities people are saying, you just created a security. That comes under security regulation. And the commodity people may say, well, you created a currency, and we're going to deal with that differently. This is a huge challenge. And overall, there are a number of myths and misconceptions about this technology. That it's bad for the environment. That's fundamentally not true. I'd be happy to discuss that. The criminals use this technology. That's kind of an odd thing. We just had an extortion using Bitcoin of a pipeline. And then everyone said, well, that shows that Bitcoin should be banned. And a few days later, they got the bad guys and took all the money away using the metadata on Bitcoin. Bitcoin is way better than cash for stuff like this. Cash is the global foundation of organized crime, of tax evasion, of the drug industry, and so on. Bitcoin and cryptocurrencies leave metadata that smart authorities use. So let me close with this thought. This is a new paradigm. And when you get a new paradigm, you get a crisis of leadership. I was so delighted that this event was being held, because what a breath of fresh air to have people from all of these countries who are interested in the reinvention of the entire paradigm of how governments fund themselves. But you get something like this, they cause dislocation and conflict, uncertainty, vested interests, fight against change. Leaders of old paradigms have great difficulty embracing the new. How is your government and how is your country going to find leadership for change? I wanted to tell you more about the Blockchain Research Institute. I can't, I'm out of time. But we're trying to solve this problem of linking the gap between the potential of the technology and the reality. And we're conducting 150 projects, including on this topic, where we create reports and videos and other educational things. And you all have the deck, so you can look at this at your convenience. But I think we're doing quite deep work on this topic. We also hold a series of global events. We just had one that had 290 speakers and 93 different sessions. And we have a big awards ceremony that last year we did virtually using holograms, and this year will be a black tie event. We also, and look at your deck, I was enabled to give you free access for a period to a series of online educational programs that we've developed on this topic. We spent $1 million building these. And we are working around the world to try and bring clarity, including meeting with government leaders from many countries. So that's what I have to say. And let me close with this idea. This all comes down to leadership. And that's why this event is also a turning point in the history of this topic. And we've been studying lots of organizations, but we've also been studying nature. If we could turn down the sound, that'd be great. Bees come in swarms, fish come in schools. Starlings over the moors of England come in something called a murmuration. And a murmuration is a thing that where starlings are out over a 20-mile radius throughout the day, foraging food, and at night they come together and they create this extraordinary thing. And the murmuration refers to the murmuring of the wings of the birds. And it has a function. It warms the birds up for the cold night, but it also protects the birds from predators. You can see on the screen here some of this video. On the right of this particular screen is a hawk, 25 times the size of a little starling, being chased by the collective power of the little birds. And scientists that have studied this say they've never seen an accident. There's leadership, but there's no one leader. And when the moment is right, some magic happens. So is this a fanciful analogy, or might we learn something from it today? Well, the murmuration functions according to the principles that I've just shared with you. Remember I said that trust is not achieved through a middleman. There's no middleman here. It's achieved through cryptography and collaboration. It's a big collaboration. And some clever code. There's code in the DNA of the birds that gives it rules. And we need rules in society. The big rule being don't bump into anybody else for these birds, but there are other rules like don't get too far away. And the murmuration also has a great interdependence. People think about tax, people as the tax man. We are all connected to each other. No business can succeed in a world that's failing. No country can succeed in a world that's failing. And that's the principle of the murmuration, that the actions of an individual bird or citizen, to use the analogy, are connected to the interests of the murmuration as a whole. And finally, the murmuration has a great interdependence and a great, what I would call, integrity. And integrity is the foundation of trust. How do we create governments that are trusted in this crisis that exists? And how do we create a tax system that can be fully trusted and where there's full compliance? Well, what is trust? To me, trust is the expectation that the other party will act with integrity, that the other party will do the right thing, which is why a little bird will chase a predator 25 times its size, because it knows that the other birds will do the right thing, that they will have its back. So imagine if we connected ourselves in a country or on this planet with some kind of vast network of glass and air and cryptography. What kind of intractable problems could we solve? How could we fund the common good, which is what governments are? How could we attack this challenge that the world is too conflicted, it's too unstable, it's too unsustainable, it's too unjust, and it's too full of inappropriate bad actors? I look at this and I get a lot of hope that this smaller, more networked world that our children inherit might be a better one, and that this age of more decentralized network intelligence may be an age where the promise of the digital economy is finally fulfilled. Thank you very much.
Thank you, Don. That was really inspirational. I like the analogy of the birds. I mean, to me, from a tax administration perspective, if they can act together, they're stronger. And in fact, the two key words that I think will drive a lot of the tax world for the next decade are transparency and trust, and blockchain provides them. We're getting quite a lot of questions on in the chat, and we can't deal with them all. One would be you've just seen in the G7, we've had the outcome here. They've agreed on a minimum tax. Yeah, blockchain can help in that.
Yes, for all the reasons that I said, we need to move corporate accounting systems onto a blockchain where it is assured that a minimum tax would be collected. Now, this sounds like a simple thing to do. Of course, it's an enormously complicated thing to do, but because it requires cooperation between nations. But ultimately, we need that. We need the world is not just a bunch of countries anymore. We can see from the pandemic that we are all connected and we have common interests. You look at a challenge like climate change. This cannot be solved by any one country. In fact, increasingly, most of the challenges and problems that we have are challenges that require stakeholders, including governments from around the world, to act together.
Another question that's come up on the chat is this whole question of legacy issues that you mentioned. That's particularly important in the tax area, and it's linked to the whole question of transmission. How do tax administrations get from where they are to where they want to be? Yeah? So how do they make that sort of transformation? How do they deal with some of the legacy issues?
Well, Jeffrey, you said it well. The challenge is to get from where you are to where you want to go. So if that's true, you need to know where you want to go. You need to have a target architecture and a target view. Now, this is not a new idea. I said this in the digital economy 25 years ago, and I used Max Hopper, who invented the American Airlines Sabre system, and he said, Don, the legacy here is my biggest problem. He says, every time I spend $1 on my current systems, I make it worse. He says, how do you create the conditions whereby new investments contribute to a desired future, as opposed to building up legacy? All of you have big budgets, and every time you spend $1, you're making it worse.
Yep. So, and I think that's why, in a sense, with the tax administration, it needs to see this as a journey, and it needs to have a digital tax roadmap. Yeah. Looking at each stage and a set of metrics measuring what progress is being made.
Absolutely. That's a good way of thinking about it. And of course, at the Blockchain Research Institute, we're doing millions of dollars of work in this exact issue.
Excellent. Look, there's a lot more questions there. We'll try to see if we can come back to them at the end of the afternoon or later. So once again, Don, that was a great presentation. It's inspirational, and I think it sends the right message. If you want, you can change, and if you work together, it's more effective a way of achieving change. So with that, look, thanks very much. We'll move on now to the next presentation, which will be, this is session 2, and it's really looking at the whole issue of the way these technologies can address the question of illicit financial flows. What are we talking about? It's money laundering, bribery, corruption, tax evasion. This is another big issue, and I'm sure that Jeff and Dennis are going to tell us about this, because developing countries are losing anything up to $90 billion a year on this. That's twice the amount they get in aid. Think how many hospitals they could build. Think how many schools they could build with that money. So over to you. I don't know who's going to kick off. Is it Jeff or Dennis?
I guess it's me. Thank you, Jeffrey, and hello, everybody. Welcome to this session. I don't see any slides yet on the screen. Is that? Oh, yeah, there they are. Okay.
Yeah, they're up now, yeah.
Yeah. So for those of you that don't know us, so my name is Dennis Post. I lead our global blockchain effort in tax, and I'm here today with what I will always call my digital twin, Jeffrey Saviano, who's EY's global tax innovation leader, and Jeff is also a MIT Connection Science Fellow, and why that's relevant, we're going to talk about that later today. Jeff, anything to add?
Very happy to be here. Thank you very much, Jeffrey. Thank you to Revenu Québec and also to DET. We really appreciate the opportunity. This is such an important topic today. What a wonderful opening. We'll reference that as well. So happy to be here. Thanks very much.
All right. So the topic that we're going to talk about today is around illicit flows and how technology can really help with that to combat those illicit flows. And there are three areas that we want to highlight here in terms of how that's impacting the world and the global economy. So the first one is, Jeffrey, you already mentioned it, right? The amounts that are going on in terms of illicit flows are, tremendous, and we need to do something about it. The United Nations has estimated the annual cost of corruption to be around $3.6 trillion due to bribes and stolen money only. There are trade value gaps, whether it's about, misinvoicing, so deliberate falsification of value, volume and quality of international trade, also amounting to trillions and trillions of dollars. And last but not least, we're seeing huge amounts that leave Africa only in terms of illicit financial flows, comprising roughly to half of its SDG financing gap. So sometimes as a tax advisor, it surprises me that we're not focusing. We're not seeing more focus on this. Similar to the focus that we see on, let's say, the tax avoidance type of things. But that's perhaps a different conversation. So the other thing we're seeing, obviously, and in the previous presentation, it was already highlighted, we're seeing unprecedented levels of government spending, as a result of the pandemic. The World Bank has estimated, $1.5 trillion in government digital investing coming out of the pandemic in 8 countries plus the EU only. And, there's a great example here, United States spending $6 trillion on stimulus and investment, and reports that over $400 billion of unemployment benefits may have been stolen by criminals. And this is not just happening in the US, we're seeing that in many, many countries. So, and last, if we know how big the problem is, and we're seeing that this problem gets bigger as a result of the pandemic, there's obviously something that you want to do about this as a country, right? So many developing countries, they don't have the right tools to effectively detect and manage attempting frauds, but they do want to do something about it. However, commercial software is typically quite expensive to build and also to maintain. And it doesn't necessarily address the interoperability challenges of tracking fraud across borders. So that really requires a new model for deploying software that is needed to actually make this happen. On to the next slide. So there are a couple of items that we would like to highlight here in terms of the technology areas that we see that can help stem the tide of illicit financial flows. And it's not just blockchain, the key topic that we're talking about today. There's also a lot of progress already to be made in terms of, let's say, the digital transformation that is ongoing, to digitize paper documents, to create new data, to make use of third-party data, exchange of information between the countries, and interoperability between data and systems. I think perhaps in the short run, artificial intelligence and what it can actually do is it may be even more promising than blockchain when it comes to combating these illicit financial flows. Whether it's reading and extracting data from unstructured forms, to detect anomalies by means of machine learning, to do pattern detection, improve your know your customer screening, anti-money laundering. There's lots of stuff that's already happening in this space. However, countries are simply not yet implementing that. And then there's, of course, the promise of what blockchain can do. And I think later today we'll also see some great examples of how blockchain systems for tax really are coming to life and are making this happen. So it's about creating transparency. We all know that. It's about creating audit trails for tax. And at the same time, we want to be mindful that we're preserving the confidentiality that is necessary where you're doing a business transaction. And there's great technology that's underneath and that can be attached or connected to a blockchain platform that can actually make that happen. And then last but not least, it's all about data sharing. So new public-private ecosystems to share data to tackle illicit financial flows. And we're seeing examples already emerging like data cooperatives and data trusts that really provide independent stewardship of data. And what is really relevant for that is how many times have you not go into a website where you need to once again provide your personal information. And as was also explained in the previous presentation, this system is somewhat broken, right? We don't want to do that anymore. We think the risk of hacking and where that information can be used in a bad way is quite big. So it's great and encouraging to see that initiatives like the MIT Open Algorithm Theory is actually reversing that sequence of steps. So it's really bringing the query to the data as opposed to bringing the data to the query. And that's, I think, fundamental going forward in order to make Web 3.0, as we all know it, to make that happen. So I've talked a little bit about the problem and the numbers involved, and the technology is definitely there. And later on, we're going to see some great examples. But how can countries actually make it happen? So Jeff, over to you for the next slide.
Great, thank you, Dennis. Just one point on the previous slide. This is a matter of technology convergence, and while we appreciate the focus of today, our focus here today, all of us on how can blockchain be applied, that specific technology, that general purpose technology applied to tax problems more broadly, we know that it'll be a question of convergence. And Dennis's reference to data trust and data cooperatives, we think addresses a huge gap that's in the world today around the legal ramifications and the relationships across multiple stakeholders to how data flows across networks. This is not just a technology problem, it's how those parties will work together. So the message of technology convergence, we think, is quite an important one. I want to talk for a few minutes about digital public goods. And we're seeing such strong interest across the globe in the development of digital public goods to advance technology systems that impact both government and commercial enterprises. Okay, you may be asking, what is a digital public good? That may not be a familiar term to everyone. I think the best place to go is to look to the UN's definition from its great work around digital cooperation back in 2018 and 2019. You see the definition here on the top left. The key term, obviously, is open. Open source software, open data, open AI models, to Dennis's point, open standards. I think you get the drift. All aligned to the purpose of attaining the Sustainable Development Goals. I've always found it helpful to explain digital public goods by way of example. So here's a few you see on the bottom left. MOSIP, Modular Open Source Identity Platform. Digital identity is the backbone of how a country effectively delivers services both to the public sector and private services as well. We're seeing a keen example by Morocco and the Philippines on how they're leading in the application. Many other countries as well. Digital identity is crucial to some of the last mile issues that Don mentioned at the outset. I was very fortunate just recently to spend time with the leadership of DHIS2. It is the largest open source health data management system in the world. It is proliferating around the world. It's led and managed by the University of Oslo. We think it's the oldest example, perhaps, of a digital public good dating back to the mid-90s. If you want to look at a model for multiple countries adopting the same technology system, avoiding duplication and getting it right and getting a benefit and solving the interoperability issue across nations, I can't find a better example than the team from DHIS2. Lots to learn for tax in trade and the issues we're talking about today from these open source large program examples that exist. One more, Modulo, open source system for digital payment, interoperability, great lessons there as well. Okay, so why are we talking about digital public goods? So critical, interoperability across nations, even within countries. And there's a great example of a new blockchain application project coming from the state of South Australia, driven by subnational government, better promote scaling of technology solutions, not just internationally, but also within countries, and getting to the issue of adoption across some of the subnational governments. I think it's important for us to talk about digital public goods today, because what we're seeing post-pandemic is a tidal wave of projects that are being initiated across the globe. And what is happening without intervention, those projects are duplicative, there's lots of overlap, there is a better approach to building interoperable systems than building multiple and somewhat similar data sharing, management, and other systems that frankly many nations need. We think there's a better way. And so we'll talk about one thing that we're doing in order to stem that tide. Let's flip ahead. Okay, here we go.
About another 2 minutes, yes, roughly.
Okay, you got it. We're excited to talk about the Prosperity Collaborative. We're really proud of our collaboration. We're a founding member. We launched it in Davos last year, aligned to the World Economic Forum, one of the last things we did before lockdown. The members of the collaborative you see there, EY, MIT, New America, civil society organization, and the Michael Dukakis Institute for Leadership. Our purpose is this multi-stakeholder collaboration to build and deliver innovative technology systems to transform tax and trade. A myriad of problems that we're addressing, how technology like blockchain and other advanced tech can help solve some of the tax issues that was the focus of this symposium today. The answer does not lie in the private sector alone. It does not lie respectfully in the public sector alone. This is a multi-stakeholder collaboration issue. And we at the Prosperity Collaborative are excited to play a role in that. Let's flip ahead to the last slide. Let's skip over this and we'll go to the last one. So how do you engage? If you are in the audience today participating in this great symposium and you represent a government, you want to engage, the Prosperity Collaborative is open to governments, trade and tax authorities. We're holding workshops beginning this summer, helping governments to develop their digital transformation strategy, help form multi-stakeholder collaborations, develop digital public goods. I'll close on this notion that we believe that there's a better way to build interoperable technology systems to solve material tax and trade issues around the world. And we think that through our collaborative, and love to engage with the many governments represented here today to do our part. Thank you, Jeffrey.
Well, thanks, Jeff and Dennis. I mean, again, a fascinating presentation. And in a sense, it's the same message that is coming through from Don, yeah? We need a global, transparent, multilateral approach to get the full benefits. Yes? Easier said than done, but I mean, you have to sometimes dream when you work in the tax world, yes? The other thing I think that I took away from your presentation, if you look at the area of illicit financial, the standards are not bad, whether they're set by the OECD or the FATF, yeah? And you can see that in the G7 communique that came out. I mean, very unusual to get reference to illicit financial flows in the G7 communique, yeah? It was there, whole paragraph, yeah? The problem, as you say, it's on implementation. And that's where blockchain, combined with other technologies, I think can offer. And I'm seeing again getting quite a lot of questions coming to me on this. One is, is the idea, could you use blockchain, in fact, to develop some sort of digital register of beneficial ownership? Who owns the trust? Who owns the foundations? Yes? Which politically exposed persons are behind them? Is that feasible? And then linked to that was another question is, to go global on that, could we actually manage a technical platform that would link up these national registers? That's the first question. Don't know who wants to answer that. Dennis?
Start, Dennis.
Yeah, well, I guess the short answer, Jeffrey, is tune into the presentation later today on withholding tax, which eventually is also a beneficial ownership problem. But I think, we've said it over and over again, right? This is a private public sector collaboration, and we all need to work together to make it happen. So, regardless of, let's say, whether it's withholding taxes or beneficial ownership or other transactional taxes, it's that collaboration to jumpstart that ecosystem to make it happen. And sometimes it feels like boiling the ocean, but that's definitely what needs to happen.
Yeah, and I think that comes. Go ahead, Jeff.
I would agree. I'm sorry. We're not starting from ground zero. There's great examples of countries that are collaborating through perhaps antiquated technology systems, or in some cases analog systems, and they're doing it with some effect. And we think that through blockchain and some of the other technologies we mentioned, that we can streamline it, make it more efficient, more transparent, and that will open other governments that are interested in that collaboration. But I think it's important to recognize that there's great work being done in the world today, but this technology can help extend that and scale it around the globe.
I got a question here from a developing country. They're saying that in developing countries, the main source of revenue is VAT. That can be raised anywhere from 15-20% of revenues. What does blockchain have to offer there? Can it actually deal with some of the problems of registration systems, tax fraud, VAT fraud, both within a country and between countries?
Well, also there, the answer is yes, and we're also seeing, some countries already experimenting with it. Saudi Arabia is one. I think Hmrc are already doing it. However, I think there's also, Jeffrey, you may recall the event that we did in December, right, where Richard Ainsworth also presented on this topic very specifically. It doesn't solve all the world's problems if you put that on the blockchain, right? There's still going to be, missing trader information fraud, but it does solve a big piece of the equation.
Yeah, and I think that's a key point, and it was a question I wanted to ask to Don as well, because at the end, it's the old thing: rubbish in, rubbish out. And before you start using these technologies, you have to make a real effort to ensure you got the quality of the data. Because if you don't have the quality of the data, the outcomes are not going to be usable.
And that's also where digital identity obviously plays a very key role.
Don, you wanted to come in here, or?
No, I agree with Dennis. I think that. Yeah, I mean, that old rule, garbage in, garbage out, is still a good rule. Yeah. In fact, it's a stronger rule now, because if you get garbage onto a blockchain, it's immutable.
Yeah, so exactly. And immutable garbage sounds a very dangerous concept, yeah?
I think you just coined a new term, Jeffrey, immutable garbage.
Okay, we'll have to get a patent on that straight away. Look, thanks both of you for that presentation. Maybe, in fact, because I think the work that you're doing with MIT and World Bank is really very innovative. Perhaps we could actually put something on the website so people could go to the website and actually, then get back to you. So if you want to send us something, you put it on the website.
Yeah, please. If you're interested, you can always reach out to me. But Jeffrey, we can connect offline and make it easy. If you're representing a government and would like to align, happy to do that.
Sounds good. We'll move on then to the second presentation here. Slightly different approach again. Goran, in fact, is going to take us through basically and it comes back to this issue of VAT fraud as well. So Goran, who heads up this DIT initiative, done a lot of work with governments. Over to you, and I think you have some slides, and you even have a video for us, yes?
Yes, I think I'm going to be quick and efficient.
Quick. All speakers say that at the beginning, and they end up by taking more time than allocated. Yes, but go ahead, let's try it, Goran. Maybe we believe you then. Yeah.
Okay. Thank you for this introduction. I'm a managing director of Data Tech International, addressing you from Serbia. And today I will present our solution, which is already in production in 3 countries and under implementation in 2 more countries currently. So it's something from the practice. I will start with saying that OECD has done extensive research on this topic, but in 2017, one particular paper called Tools to Tackle Tax Evasion and Tax Fraud highlights the important points. One of them being that legislation introduced by the tax administration of a certain jurisdiction and technical instructions on how to comply has to be very clear. Unfortunately, we don't have that transparency in every country. Our solution is called TaxCore, and it's a platform that is run by the tax administration, by the tax office, and enables monitoring of all transactions mandated by the law to be fiscalized. TaxCore has no technical obstacles when it comes to the use. Any business size, any business activity, from a farmer to a telco operator, they can all make their billing system compliant. For the time's sake, I just made this video, so I'm going to play this video just to show you in 3 minutes what TaxCore is about.
Sales transactions, as we know them, are peer-to-peer process that occurs between buyer and seller. Tax office gets notified of this transaction later, which leaves the door open to various tax evasion and tax fraud scenarios. Can there be a three-way transactions in real time? Yes. Yes, it can. Enroll authorized person of a taxpayer to be issued a digital certificate to manage this process. This is an electronically convenient and digitally secure for everyone. Authorized person responds to invitation and submits secret PIN necessary to produce his/her personal digital certificate. In step 2, happens as soon as response is received, personalization officers at the tax office will issue a secure element for the authorized person, after which he or she will be able to manage fiscalization in real time. Personalization process can be managed from any branch office across the country. Step 3, tax office delivers secure element to authorized person. And it's not always ceremonial, as it was for the first time in Samoa. Taxpayer is now ready to issue fiscal receipt using electronic fiscal device. It's worth mentioning that EFD that works according to standard is off-the-shelf set of components. Can be a laptop, tablet PC, phone, any printer capable of printing QR code. The key component is the secure element, which connects to EFD and assures that every fiscal receipt is digitally signed. Finally, such fiscal receipt is verifiable, not only by tax office, but any customer will be assured that all taxes paid are fully reported. In Fiji, there is a reward for this effort. Why not? It's easy. And every customer is doing his part to stop gray economy.
It sounds very simple. Tell us the
And now to summarize, taxpayer is in.
It is simple. And I just want to address this, the way that we are acquiring data from taxpayer. It can happen in 4 different ways. It can be a remote audit, which is most common and a seamless way where all receipts or invoices are uploaded to the tax office via internet. There's a local audit where copying data manually from the sales point to a thumb drive or transfer to the tax office in encrypted form. And QR scan, which is just means of scanning a receipt. Tax office gets notified anonymously that transaction with enough details has actually occurred. And secure element audit is another on-spot manual retrieval data, but we're retrieving the internal data only. So let me just explain what the internal data means. It's actually a set of 20 SO counters that is embedded in the receipt after receipt and making it possible for us to determine the actual gap. So, for example, if the first receipt in a chain is valued of $110, the next receipt is valued of $60. One of the accumulated counters will say it's $170. And so on. We have followed continuously received these invoices to our backend, but then all of a sudden the internet disappears, which is a normal circumstance, and we don't have any data coming to the backend. But then somebody just happens to scan that receipt, and we get notified that receipt 15 is out there, valued at $80 and a cumulative total of $1,080, which gives us an exact determination of the gap that the 11 receipt is missing, and it's $875 worth, and all the tax, the amounts as per all the tax rates that are used, all indirect tax rates that are used in the collection point, the sales. So here is the just what we are shortly looking under the hood, and I don't have enough time to explain everything, but the proof of audit is actually the function that is able to determine that audit is happening in a continuous manner. And in this first scenario is the simplest case, where no additional audit packages or the receipts are generated during the whole audit process. So the transaction is issued, and audit process is initiated by invoking that command in the secure element that happens without any human intervention.
And it's almost in real time as well, yeah?
Yes. And well, real time at the sales point. So the taxpayer and the customer does not notice that something is going on. Internet might not be available at that moment. That's why this function gives an assurance that something has occurred in the past, and there is no real time information at the server yet. But it will come with this proof of audit that assures that what happened in this offline state was secure. And that's very important. So in this first scenario, it's the simplest scenario. If the audit, when audit ends, the server will either say it's a true or false. True means all the transactions are reported to the server, and that means that they can be safely deleted from the journal. You don't even have to have a journal set of all the records because they're already at the server, accessible not only to the tax authority but also taxpayer. So that gives a lot of room to digitalize everything and not even have any kind of paper trail of the audit. And in the next scenario is a little bit complicated because the internet is disrupting all the time, and there's a continuous operation, and there is again a sequence of audits that's happening. In the third scenario is again another more complicated scenario. So everything is covered, all the situation, the life situation that happens in the field, where internet is creating a problem or not always available to the taxpayer. The function assures that every transaction that takes place eventually gets reported, and because of the digital signature and everything that is embedded in this transaction is assuring that all the information is true. Yes. Yes. In order to assure that compliance is respected by all taxpayers, there is a measure to impose to those who fail to continuously fulfill their obligations, like to limit the transactions. And if fail to submit all the transactions, the limit can be triggered, and the secure element would stop signing receipts. This is, again, a seamless process, invisible to a taxpayer, and there won't be any I would say delay in the operation or disruption of work at the taxpayer side. Seller, buyer, and taxpayer are all on the same page, and involving customer in monitoring compliance has been firstly launched by the Revenu Québec in 2008, I believe, and it has inspired many other countries to follow this path. We have built on this concept and introduced various incentives to encourage customers to participate in monitoring compliance. So by scanning a receipt, there's a lot of incentives that a customer can enjoy, and share that information with the tax authority as well.
30 seconds.
I think I was on time. Okay.
Absolutely. That's, well, you've been, all the speakers so far have been very disciplined. Yeah. Again, maybe before throwing the floor open to questions, perhaps I could ask the panel, the speakers, whether you have any questions you want to put to Goran. Yeah. Anybody hasn't? Danielle, any questions?
It's not a question, it's a felicitation, congratulations, because we are very happy to see what Goran and its team have been able to do in few countries and few more soon. And we believe it's the right way to have the fraud not happen.
Yeah.
Instead of looking after, try to find a business that has hidden some revenue. The owner of the business knows that all the bills are in the machine or in the net, and it starts a virtuous circle. When your revenue are all knows, you have to have expenses that goes with it, and workers are coming back on the black sheets, and black workers are not from the black market anymore, and furnitures are not from the black market anymore. And I believe it's a very good, very inspiring work by Goran.
Yeah, I always say, if governments are after money, which they are at the moment, you have to look at the VAT gap. Forget about the corporate income tax. The VAT gap is probably about 3 to 4 times the size. And just a question there, Goran, from me this time. Do you have any information on what was the size of the tax gap, the VAT gap in Fiji before you put this in place and after?
Well, COVID has disrupted this analysis at one point. Before, it was the first year of implementation, which was in 2018. There was an increase of 10%, but that wasn't the full scope of implementation. And yet there are still some business activities that are due to be onboarded into this system. So once the system is fully implemented in the country, where all the transactions are fully registered, then we'll have the true picture of the differences. But the VAT gap before, it was around I think 80 million annually. So that wasn't something that was just in the industry that was under the scope of the fiscalization. So once again, this system has to be implemented on a full scale, and there is no reason not to be. So once it is, then all the transactions are accounted for in real time.
Yeah, and perhaps another question, well, the question that came up on the chat here was, is it scalable? Because, I mean, the two examples you're giving of Fiji, there's relatively small islands. Is it easier to do that in a small jurisdiction?
No, it's same. It's the system is built in such way that any municipality can have its own system. So it can be spread around the country. So it's not a central system. It could be as well implemented in China or India, anywhere in the world. Basically, as the architecture is done in such a way that it's not dependent on one single point of failure, like a central point of failure.
Well, I think it's been really helpful having a very practical example, in fact, of the work you're doing, and I'm particularly happy having that example on the VAT, because I think that's where a lot of the tax fraud is actually taking place currently. With that, we're going to stop here. Thanks again, Goran, for making that presentation. And for everybody, I mean, all the slides will be on the website. So you'll be able to get much more details than the speakers have been able to give in the short time allocations. We'll take a break now, and we'll come back in 10 minutes time, Swiss time, yeah? Not Quebec time, not EU French time, but Swiss time. We'll come back at 4:20, and then we'll continue with the session. So 10-minute break, and then we'll be back, yeah? Thanks, everybody, again. Okay, welcome back, everybody. I hope you had a pleasant, even if it was a short break, and you have the energy to see us through to the end of the session at 17:30 Central European Time. Yeah, I'm very pleased to be able to have my colleague Robert Rees, in fact, with us today. Robert actually heads up the whole program. In fact, he created the program on tax and technology at the university. One of the first programs on tax and technology. You know, it's nice when you can advertise something that's true. And if you want to know more information, I'm sure Robert can provide you with that. Yeah, we're going to change tax a little bit now because up to now, the main focus has been on what can governments do in terms of using blockchain to improve the function in the tax systems. Here we'll hear what are multinationals doing. And Robert will be able to explain the experience of two multinationals, Siemens and Henkel, two big multinationals, and how they're not just talking about blockchain. They're doing it, they're using it. Or like the Africans say, it ain't just talking the talk, it's walking the walk, yeah? And I think, clearly in some countries, multinationals are ahead in terms of the use of blockchain and governments. So I think we have a learning experience of tax administrations here on just seeing, in fact, how these two large multinationals approach the issue, not just of getting better compliance with the tax rules, but getting better compliance with the trade regulations as well. So over to you, Robert, and you have about 10, 12 minutes, yes? Maybe an extra minute. We'll give you a 13-minute one, yeah?
Okay. Yeah, ladies and gentlemen, thank you very much. It's really a pleasure for me to present some real cases coming from corporates. You know, I'm heading the second center in the institute, which is dealing with transfer pricing, and therefore Jeffrey and myself, we're working closely together in this. So coming to the next chart, I think this is a chart which creates a so-called blockchain radar. So we thought about how to implement different blockchain applications. And you see there are different dimensions on this in terms of what text types we're talking about, what timeline we're talking about, and what, prospectively, what type of blockchain application we can think about and, going to be presented. And I think, I will come to this picture in the presentation, during the presentation once more. So this chart I can skip because we have heard it in the previous presentation.
2008.
No, and this I'll skip it as well for time constraints. Otherwise, people
that do deal with blockchain seem to like sort of musical videos. So, but go ahead, Robert. Yeah?
Exactly, and then it will take a long time.
Keeps people awake. Yep.
What is really important here is the process flow in the end-to-end view in our processes, which we have normally incorporated in companies. And you see from the procurement to the sales, there's a lot of production and supply chain in the middle. And all about is dealing with different type of direct, indirect taxes, transfer pricing, and VAT and other topics. And as you see here in the chart, we have significantly data needed, quantitative data for customs, for transfer pricing, for compliance topics, for VAT in Europe, for excise taxes, and even more. And then we have a lot of qualitative data. And, if you try to sort it out a little bit, what type of regulation we have to consider, I guess blockchain is in the area of quantitative data, really something which you can play with, meaning VAT, transfer pricing, and customs. And then further on, this video, prospectively, we can go for, but I cannot click on it. If somebody might help me. If not, then I'm skipping it. So that's the video.
Oh, we can dance for this one as well, can't we?
Yeah. You see how
the new blockchain tango.
Yeah. How the process is flowing here. A lot of paperwork.
Yeah, I always said that tax people were fun people to be with, yes?
It's step by step, authorities play a significant impact. And the duration of paperwork is horrible.
Back to you, Robert.
Yeah, and in the end, you can, get less paperwork by applying blockchain in these processes. This is the picture all about. And, you know, therefore, as I said before, tax, VAT, excise tax, relevant material in the supply chain area, you can put the blockchain into the middle and then you connect all the lost dots here in terms of countries, documentation flows and whatever. So I think this was the starting point we had in Henkel and Siemens, and then both together we sit together and say, hey, how to do and what to do better compliance work, how to control it better, how to make, for instance, a proof of origin in the customs field or the proofs of delivery in the European VAT field, how to streamline the administration about and how to optimize the information flow, because in the end, from our perspective, blockchain is something which really supports communication. Communication between the companies, communication between companies and authorities, and I think this really counts in the end of all. So, and then we initiated and looked in a very early one, therefore the blockchain radar comes later. We looked for prospectively cases, the long-term vendor supplier declaration, which was one of which we like to start with, is a customs case, I know, but you know, from the fundamental processes and technology, blockchain, distributed ledger technology, I guess that's all the same, which you can run. So we have this timeline curve in terms of what comes first, what comes next, but you know, there's in the current status real timeline in which as your technology is available, then you can pursue with many other use cases to develop. So I guess the long-term declaration is something which is the source of establishing the passports for good transports. That's an electronic passport for good transports, and therefore it's really needed for customs purposes, for respectively transfer pricing, as well for VAT purposes. So it's for multi-purposes. You can have one source of truth here by defining what type of information is going on. And to simplify this, you have here the ship from ship to perspective, where you're shipping raw materials, where materials are produced, and where you ship the finished goods to a customer, for instance. And besides this, you have a lot of paperwork, the invoices, and you know, all these delivery papers you have to take into account. And you know, in this three-step approach, a lot of documentation is due. Yeah. And if you're going further here, you know, we have to think about what to do, how to communicate with the suppliers in this instance, how to get the right information at the right place in the right time. And therefore, blockchain was the choice of us that we can collaborate with this blockchain exercise. This was the idea. So, and therefore, you know, the product, you know, it's always the same. What are the benefits? What are the disadvantages to face in a product phase? We looked at all, and I think we make a good progress by getting everything on our plate. And this means this is, for instance, the VAT case for proof of delivery. It's the same. So there are a lot of projects in the air. And moving on, I like to skip it to come to the use case, which is the use case for long-term supplier declaration of us. So that's, as I said, you have to testify the country of origin for the material. You have to testify what is SHS code, which is the tariff for a good to be transported. And, you know, there's a lot of documentation and a lot of effort in a day in, day out. And what I like to explain is this here. So we found an association. It's called TaxChain. TaxChain is an open source, so a lot of members can be put in. And you see there's a working group and there's a development group, so that, you know, a lot of licensees can enter this network as an open source, can be part of. And then, you know, jointly we want to develop the use cases as the long-term supplier declaration is the first of. Yeah, and I guess, you know, we are now looking for partners. We have significant talks to others to really go to, we found this is a German term, Institute of Digital Taxation in Germany as well, very close to the German federal authority, so that we can really go and make proposals, because in the end of the game, the authority should be part of and should acknowledge what type of use cases we want to implement. And gonna this perspective, the tax chain, the open source platform will be in the middle and is really responsible to connect the dots, so that all partners have a platform on which they can run their separate use cases. And now very technical to this, you see here the tax chain is in the middle, that's the blockchain application. And the connection to different companies, you see Henkel first, for instance, there is a node to connect to this API, the connection to the ERP system. In Henkel, it is direct. In Siemens, it's a little bit different. You might heard about that Siemens concern is split up in 3 different groups, and therefore, they need a middleware to safeguard and to store all these topics separately, that they are able to feed the newly established sub-holdings so that they're capable to use the system as well. And in the upper part of the chart, you see different other companies, respectively, which like to join the platform here. And I think it's really, the picture shows that the tax chain is a platform to follow. So for the sake of time, the use case implementation, it would be some videos, but it would take too long. But this video is referring to the video you have seen before. That's a cycle. Siemens purchases some Henkel material in the gluing exercise, our glue sticks. Then, this is shipped. Then Siemens received the goods. Siemens has initiated this request for the supplier declaration. So it means that they can fill in the passport for the goods transport. And then, the declaration is sent. And all this is related to an automated system where we're going to request something, where you're going to respond something. It's all information which can be stored and uploaded into these databases, and then it runs. In a further step, for sure, then the authority, customs authority in this instance, or VAT authority, can join us and get access to this network. So via a hash or whatever, then they can see what's happening there. So this is only an example. The chart is now running, but for the sake of time, I'm skipping. So this means for us, a lot of companies are talking about blockchain. A lot of people saying, should we create a new ecosystem? What is about? What is in? What is out? But simple look to the SAFTI, to the new requirement in Europe to report, to make risk management on VAT purposes. All this can be fed with blockchain technology and with this collaboration of knowledge. So this means coming back to my radar, and I guess from the university perspective, as Jeffrey pointed out, from the Vienna University perspective, I guess, we are more than eager to get more ideas, to get more potential use cases to complete our radar so that we have a huge working platform, because as more use cases we would add to this, I guess it's more interesting is this for some collaboration topics. And we talked about, Jeffrey and myself, we talked about what might be a project to run and to initiate. And I think, the distributed ledger technology, as I said before, for tax, transfer pricing, VAT, excise tax is very relevant. So, for instance, the SH code is used for alcohol tax in the same manner than for customs, for trade. So there are a lot of similarities where you have put only once data into the system and make use of it. And this means, we really strive for this transparency, for less manual task and work, and this will really secure that we do not have, that we have automated interfaces, that we do not have some mistakes in something and the failure rate will drop down, believe me, as we have seen in the example before. And from the techniques for the technology we have to apply, we think that this is not a bright shining exercise. It's easy. It's more, the effort is more in the implementation. This we figured out, and therefore the legal perspective has to be taken into consideration for sure, because you have to find definitions, what is what, and so on. So there is a lot of legal work for sure to be done, but I guess in general term, the technology should not be such as complicated that we have a long-lasting search for. So I think it's there and it's applicable. And therefore the potential project is in working packages, VP, WTP, is the specification, is the platform, is the infrastructure, is the showcase, as you have seen in our radar. It's the platform, and then make it do it. So I think we are ready. We have a lot of use cases available, and I guess this counts. Sorry, this was the last one. This counts. That technology is available, and it's really the application, execution. Execution is now really the phrase of the day. We have to go to execute it in projects because many ideas are on our plates. Jeffrey, thank you very much.
Thank you, Robert, and that's perfectly on time as well. And I think it's really interesting to see, how two large multinationals are approaching this. Fascinating also the linkage that you make between trade and tax, particularly when you focus on VAT and customs and transfer pricing things as well. And just to emphasize what Robert said, in fact, it's an open invitation. Any company or any country tax administration that wants to join us in this exercise, be very, very welcome, and we can provide more information on that. I think Robert is right in emphasizing that the technology is not the problem here. Yes. It's culture and it's the legal environment, And we'll pick that up in one of the next presentations when we look at the withholding tax pilot, where we actually did run up against some legal problems, but we were able to, we think we were able to resolve them, Dennis, can I ask you, because in a sense, your presentation was coming to this very much from the perspective of the tax administration. How do you relate to that, to what Robert is saying? Do you see that tax administrations are going through the same process? Dennis, if you're still there? Or Jeff?
I think they changed the platform.
Oh, they changed the platform. Okay, let me pick up some questions then that are coming through on the chat. One thing, this is from a European country, to get I'll just read it. To get the full benefits of blockchain in the area of VAT and customs, don't we need more harmonization of standards? Robert.
So from my perspective, definitely, because there are a lot of initiatives. For instance, the Dutch authority, they like to protect their harbor in Rotterdam, and they are in this competition, the harbor competition. They're number 3 in the world, and they like to stay with this place. And this means they like to automate a lot of things. They started with the logistic area, now they're sticking to VAT and customs. And there's a lot of initiatives in the Netherlands to go on and to make a definition what is in. And I think this is one part of this technology topic. Technology is available, but you have to define the terms and conditions. Otherwise, we are not talking about the same language. And this means this wouldn't go to a standard itself. I think the Chinese people are trying to do so we do know this, and then the question is, should we depend on Chinese definition, or do we have European or whatever OECD definitions in ourselves? So I think a lot of topics going in the legal side. Technology, connection of the technology is feasible, and then put the right use cases. And with the right use cases, we must get the buy-in of authorities. Otherwise, this won't function.
Well, I think that's absolutely right. I would put it another way. In fact, it's only government that can set the good governance framework. And ideally, what we want here is a global government standard if you can, not a Chinese standard, not a United States standard, not a European Union standard. That may be a little bit difficult to achieve, but I think given the G7 summit and the emphasis on the good feeling that came out of that, perhaps we're better placed for that. And another question that came up, do you envisage that this approach will be extended to the corporate income tax at some point in time?
Yes, I like to distinguish the corporate income tax has a lot of qualitative topics. So it means you make judgment, and to make a judgment, that's a little bit different to using blockchain in this, because if you have too many judgments, then you have too many minds and too many perspectives, interpretation of something. I think this is to a lesser extent in the transactional taxes and transfer pricing to some extent, but in customs, I think I would start with VAT, customs, and transfer pricing first before I step to the corporate income tax topic.
And then another question, again, in terms of coverage, what about the sort of the land and building taxes that business pay? Would blockchain be a good approach there?
Yeah, sure, absolutely, because this is related to property tax or whatever. I think it's simple, like VAT and other topics. Yeah.
Okay, I don't see any other questions on the chat for that, so I'd just like to thank you, Robert, for that. I think it's been really helpful seeing some practical case studies, and again emphasize that if people want to join us in this new venture that we're just setting up, be very happy to do that. There'll be more information on the website on that. Yeah. So with that, thanks again, Robert. Great presentation, and we now move on, in fact, to the session 4. Yeah, and there we have 4 presentations. And I'm not going to go through them all. Let me see what we got here. Yeah, we have 4 presentations. We'll kick off a presentation from my friend Danad. And thank you for staying up. I know it's very late, in Thailand. I can't remember. It must be about 4 o'clock in the morning, and you managed to stay awake. So that says something. We must be actually talking about things that are interesting. So he is from the Thai Ministry of Finance. I think Thailand is a good example of if you get the boss, in this case, this is your Director General, if they become an enthusiast for blockchain, everything becomes possible. And I remember meeting him at a Kata meeting in Malaysia, and he was one of the few commissioners there, the Director Generals there, who actually said, I think that blockchain is the future. And that was 2 years ago. So we're very interested in hearing, in fact, your experience with these tourist taxes. We'll then move on and we'll have from Nick Davis from Hmrc, a presentation that's really talking about what he calls the utility trade platform, which I think has both a tax dimension and a trade dimension, and that sort of fits in a little bit to what we've heard from Robert. That will then be followed by a presentation from EY and Vienna. We had hoped to have Marlies de Ruiter, in fact, but unfortunately she fell sick this morning. Yeah, so she apologizes she couldn't come. But John and Ivan will be presenting her presentation on the way that blockchain has the potential to completely transform the operation of cross-border withholding taxes, particularly on cross-border dividends. So that'll be an interesting presentation. And then we'll finish up with a presentation from my good friend David Deputy. He's been my guru for the last 5 years. When I'm getting things wrong technically, he comes in and gently corrects me and said, Jeffrey, you don't really understand it, yes? And sometimes that's actually true as well. I didn't understand it. So David will be talking a little bit about the issue of the potential impact of taxation, on the fact that central banks are increasingly considering issuing their own digital currencies. And that, in a sense, would pick up some of the points that Don was making at the beginning of the presentation. Yeah, it's going to be a challenge getting 4 presentations in 45 minutes, but we're going to give it a try. And we're actually sort of 1 minute ahead of time. So with that, Daned, I'll pass the floor to you. And again, thank you very much for staying up so late. Yes, thank you. Over to you. Tell us how the blockchain-based tourist tax actually works. And I have an interest in that because my daughter lives in Bangkok. Yeah, so next time I come, I'm going to be using it. Yeah.
Okay, so it's a pleasure for me to be invited to share Thailand's experience on the blockchain and opportunity to transform tax system. I have divided. Can you hear me all right?
We can hear you super, yeah.
Okay. my presentation divides into 4 parts. First, I will talk about how we used to do it in the past and what were the problems. Then I will move on to why we chose blockchain technology and the overall process of the VAT refund. After that, I will talk about the future challenges and the problems we have to overcome. The final part would be what other areas we expect to use the blockchain. Well, tourism industry accounts for 16% of our GDP, and we received some 200,000 tourists that pass through our VAT refund counters each month. So that's quite hectic. During the past 5 years, number of tourists steadily increased, and we had to find out the solution of the pain points. That is, documents were missing by the tourists because they might lose some of the PP10 form, which is called the request for VAT refund, or perhaps the receipt. Long queue were experienced at customs and the VAT refund for tourist counters. Traditional process, which is filling in manually by hand, took a long time. Data were not connected by 3 government agencies, that is Customs, Immigration Bureau, and VAT Refund for Tourist Office. Some luxury items were not flagged, or unqualified items were sometimes included. And these were the pain points that we found out. Now, let's move on to the blockchain. It's our Minister of Finance policy to improve the work process and service delivery of to improve overall efficiency of our service. It's the Director General, who is very IT-driven, initiated the digital transformation and launched the world's first VRT, VAT refund for tourists, powered by blockchain. There are 6 stakeholders. Oh, sorry, forgot to click this one. There are 6 stakeholders involved in this diagram here. So there are shoppers, retailers, the shop, Customs Office, Immigration Bureau, VAT refund for tourists, and the bank. Yeah. With the use of blockchain and applications, the moment the tourist lands in Thailand, he can download the application, giving him information as to where he should shop, how much per day he should be shopping. From doing that, once he goes shopping, information of him would be stored in the blockchain. And as he leaves Thailand on the final day, he goes to the Customs Office, with goods inspected. He can then move on to the Immigration Bureau and then the VAT refund for tourist counters. When the person arrives at VAT refund for tourist counters, our officers can be assured and trust the system that the custom officers has looked into whether goods has been declared, and Immigration Bureau whether the correct visa type, whether the person comes with the correct visa type. He can just quickly assess and give the click on it. The tourist can get refund in various forms, that is e-wallet, credit card, or through cash, or by cash, or even use mobile phone to get refund if the amount is less than approximately $140 US. That by the time 9 p.m. each day, the money would be transferred through payment gateway every day. With blockchain benefits, when it comes to blockchain technology, I think for government agency or perhaps even the private sector, they would ask whether it's worth investing, and does it solve problem of trust, particularly in the case of Revenue Department and Customs Department and Immigration Bureau. Problem of trust has been solved, especially by our staff. They can rely on the systems, as all the information on the blockchain passes through step by step, and we just can proceed with the refund much quicker. Security, well, blockchain for us, I think it's quite relatively safe. Real-time information as the person passes through from customs to VAT refund counters at the airport perhaps takes 5 minutes or 10 minutes by the time he reaches the counter. Cost saving as well. And other benefits, if I would like to go through quickly, reduce use of paper, the correct information as to which the visa type, whether the visa type is right, and the store that sells VAT refund for tourist goods. But we have experienced sometimes that the actual store, what do you call, scam, they quickly come and go. So the blockchain would certainly help us detect this type of thing. Moving on to my other slide now, third part, is the future challenges. Is that for us in 3 years' time, we hope that we can attract most stores to participate in the electronic VAT refund for tourists. Using the APIs, larger stores that can develop their own program, their program would use, what do you call it? They would develop their own. They would comply with the APIs, and the web portal would be provided for smaller stores that cannot develop the program. We hope to extend our service channels to our as many platforms as possible. As for now, we receive lots of Chinese tourists, but however, Chinese tourists cannot download application outside China. So we come across this by forming partner with Alipay and UnionPay. Currently, we just use the H5, but later on, as we amend our tax law, we would provide a single sign-on system for them to facilitate the service. In the future, we hope our AI would be more clever and screen better information of eligible goods and correct visa types and so on. That would help us serve better and gives make our tourists more happy. Now, other areas, the final part, other areas of the blockchain that we intend to do or to expand is the NDID, is the, sorry. Yep. This one is a central platform of identity provider. It retrieves verified ID information from the source, that is the bank. The level of security used in this one is the same as the bank. It uses facial recognition. The system is considered to be secured, and the user can trust the system. When individual wants to file personal income tax return or check on his My Tax account, he must agree and allow NDID to send KYC, the know your customer information. Yep. Know your customer from information from the source, where the individual has agreed to give consent to use the facial recognition and the personal information as means of verification to the Revenue Department. Using this one helps the individual to access my personal income tax account, and these information would be pre-filled for them. So the next time they access, it will be much easier. Now, the other area that we are doing is the electronic tax invoice. It's the tax invoice system using blockchain technology to issue, send, and store electronic tax invoices. The project was launched in 2020 as part of the Revenue Department Tax Sandbox. It helps verify the correctness of the purchase order, good received, and tax invoice. Yeah. Once the electronic invoice will be sent through blockchain to the Revenue Department for audit officers to check every before the 15th of each month. So it helps our to minimize work done by our auditors having to collect this information. The tax invoice issued by blockchain has 3 nodes. That is the buyer, the bank, and the seller. This one. Buyers, the seller receives money for the goods money transfer, and the goods has been, once the good has been delivered, the seller will issue the electronic tax invoice here. 3 parties can see the same e-tax invoice on the blockchain, which cannot duplicate. Although this is in phase 1 of the Revenue Department, we are not actually joining the node with them, but somehow these are in the agreement. They have agreed to send us information of the tax invoice issued on the blockchain to the Revenue Department. The buyer and the seller have agreed. These are big companies, conglomerates. We have the same. We receive the same information as the 3 parties involved in the blockchain, but eventually, as it's on a trial process, this one, and the trial is due to end in June to check the correctness and the accuracy of the system. Once the trial process is completed, we will join the node with them eventually. And that I have come to the end of my presentation.
Well, thank you very much. That was, again, a fascinating presentation. I'm sure you're going to have a lot more happy tourists, yes? Yeah, this is, I can remember how long I had a queue when I was last in Bangkok to get a refund. Yeah? So we have some 1 or 2 questions coming in. One question is, how is data privacy regulated and secured? How do you ensure the confidentiality of the data that you have?
The confidentiality of data. It's we use what do you call the NDID platform. I think that's what they're talking about. Before the person, this one is a platform that provides information. So each individual has to give consent to the banks, whichever banks he agrees to provide information. Then this platform retrieves such information. If the individual access from how can I say? Well, for instance, the person wants to file a personal income tax return, right? So instead of keying in his own information, he can just goes to the NDID, said, I want it to pass through NDID. The NDID then send us the information that has been verified through facial recognition and some other sorts of information. Mm-hmm. And also we have section 10 of our revenue code, which is quite what do you call? It prohibits the use of information unlawfully. And then our staff would be quite concerned to share such information without prior consent.
Yeah, I think that's the key. I mean, in a lot of this work that we talk about today is you have to actually be able to say to the taxpayer, your information will be secure. Yeah, I shan't mention what happened in the IRS over the last few days, but we'll see how that works out. Look, thank you very much for that presentation, and again, thank you for staying up so late. Yes, we're going to move on now. To the next presentation in this session 4, and that's by my good friend Nick Davis, who is I never remember your title now, the Innovative Chief, the Innovator in HMRC.
I am an innovation lead. There is more than one of us. But yes, thank you very much, Jeffrey, and to Danielle for the invitation. And I should say, actually, being an innovation lead is quite a privileged position, because my remit is to explore the art of the possible. So please do not take anything I say to represent the formal view of HMRC or ministers associated there.
Oh boy, then it's going to be really interesting, Nick. Then yeah, sounds fine. Yeah. Okay, and in a sense, I think. Again, I like the way you've made the link between the trade and the tax side, yeah, yes. Because that's that's been a theme that's come through a lot of the presentations.
It is, and I think just to develop that point, my approach is that tax isn't something, I don't think, that should sit separate from and divorced from the economy that we are charged with taxing. I think the whole opportunity here is for tax to be much more part of the world, the economy that we are experiencing, both domestic and international. And I think to go back to Don's sort of three-legged bookkeeping, which would have got me failing my accountancy exams, but it does actually speak to we the tax authorities should be coming out of our ivory towers and our tax offices and getting in there and having tax real-time, intuitive, and to the extent possible, effortless. And I think that's the way to really realize the benefits of this technology. And here, I can't resist. Am I changing the? Has that moved?
You're on reducing frictions in trade, yeah?
Yes. So that pile of paper there, which is about the size of a wine bottle, is one weekend's worth of paperwork for a medium-sized importing company in the UK. And it doesn't even include duty paid and non-controlled goods. So that is even just a fraction of the amounts involved in about 6 pallets worth of wine coming into the UK.
So you're basically saying this is environmental friendly as well, then, yeah? Less trees being cut down.
Exactly. So this is all about responding to the way the world trades and really taking advantage of all the possibilities that come before us. So I'm struggling here. So just looking at the global perspective, I should say that when I was involved with, I first became involved with blockchain back in 2016 when the UK published a report on this. And I remember drafting a line for the then government chief scientific officer saying blockchain could transform the relationship between the citizen and the state. And I thought it would never get through, but it did. And I think that's really the theme of what we've heard today. But here, I don't know whether you've heard, but the UK has the aspiration to have the world's most effective border by 2025. I'm not quite sure where we stand just now, but I know that we're not going to compete with some of our global partners and allies and competitors if we don't take advantage of and understand better the world of blockchain. And here are just some examples that I've come across. I'll say a bit more about Australia because that's my first my main example, but the Dutch Blockchain Coalition, a brilliant endeavour. They set off based on our report, on the UK report. They set off without really knowing all the ins and outs of what they were going to do. They just knew they had to do something. They set off and they did it, and it's turning out into a really good model. Abu Dhabi ports, you may know that based on TradeLens, they've got a platform that enables their customs authority to look at all the movements in and out of all 80 odd of their reports. The Australians, again, have their national blockchain and their intergovernmental ledger, which I'll say a bit more about again. And certainly the Chinese have got the blockchain service network. They've reduced the cost of the average blockchain proof of concept from $100,000 to $3,000. That's the sort of things that we really need to be paying attention to. And as I say, TradeLens is a global platform which is growing as we speak. So I'm focused on not just the UK, because we've got to interoperate, but how can we really transform the whole business of doing business with the UK and with our global trading partners. So we've come up with, the focus has been the RFIT, the Reducing Friction in Trade project. And the case for change almost doesn't need making. You know, £15 billion a year is just the additional cost of declarations once we change our relations with the EU. You may have seen WTO figures that show that the GDP effect of sorting out the hassle and the friction that goes on in trade is about 4% of GDP compared to tariffs, which is about 1% of GDP. So I think that we can safely leave the tariff stuff to the politicians if we, in the administrative layer, can sort out all the faff that goes on. We could really make a difference. And what we've got is a vision for a utility trade platform. Utility means that it's open to all. I'm aware that the Unilevers and the Nestle's and the Coca-Colas and the Walmarts of this world can pay for their own platforms, but I'm interested in something that works for them and the smallest stock fruit farmer in Kent in the UK who is selling her produce to France, a newly created third country. And it's a platform based on DLT, but where any trader of whatever size approaches the platform, summons up a smart contract, which will ask them for all the data that they need to give to all the actors, and I mean all the actors, both commercial and regulatory, in their supply chain. They have access to it through the platform, and the trader need do nothing else. That's our vision. A one-stop shop, job done. And for the compliant trader, that becomes such a compelling prospect that everybody piles in, uses it, and my colleagues in Hmrc can spend their time catching up with the bad guys who are still carrying around suitcases full of cash and are smuggling stuff that they shouldn't be doing. It needs to be collaborative efforts. It needs to have common standards and interoperability built in from the start. And it does need to align with those platforms that we already know are out there. TradeLens, Marco Polo, We.Trade, NBSC, Callista, and so on and so forth. It's no good having a unilateral network effect. That's just a contradiction in terms. So it's got to align. And I think the genius here is not just about DLT, but actually combining Steve Jobs-like all the available emerging technology into the same platform, so that we have that, we build it up from the user. We have the distributed ledger technology in there. We build in Internet of Things, GPS tracking, smart contracts, and ultimately we have a digital currency as well, so that you could actually get atomic settlement at the border, where the VAT or the import VAT or the tariff due gets split off as the contract settles. And again, the trader doesn't have to go through all that process of replicating data and re-establishing bilateral relationships of trust between the whole ecosystem. In fact, I think I've tried to stop talking about supply chains and talking about supply webs, where everybody can feed off the same narrow bit of data that is generated as a consequence of the commercial transaction taking place at all. So, how does it work?
Nick,
well,
1 more minute.
Sorry. Just to show it's not just the ravings of a lunatic. There is some substance to this. We've been working on a pilot with Australia for over a year now, where that thin band of data in the middle is all assured on the blockchain, and all those participators and all those processes can feed off the same data. We've integrated that with our own systems, with our customs declaration processes. We're working with the Food Standards Agency, with our Home Office who deal with people and other risk departments. So this is really addressing the use case where it all comes together. Everybody in the supply chain wants one thing, which is reliable real-time data about cross-border transactions, whatever their business they're in, whatever commodity they're in, whatever country they're in. If we can address that one, then we're really laughing. And just my final slide is how do we go from here? Well, I think we need to build up. We're building it like an onion. We've started with the Australian wine proof of concept. We're building out into different commodities, critical minerals, for example, crucial to net zero. So you get ESG, SDG, and net zero compliance built in. Build into other agreements with our EU partners, strategic interoperability with the bigger platforms, and eventually you have the free port-to-port interoperability as well, making everything smooth. The customs my export is your import. Everybody can feed off the same data, and before you know it, we really do have border 3.0 as a proposition, and everybody's happy. So, and final point. If anybody out there is interested in doing some bilateral proof of concept work based on that sort of proposition, I'd be very happy to hear from you. Thank you, Jeffrey.
There we are. There's a good open invitation, yeah. And perhaps, Nick, you've just outlined the solution to the Irish border issue as well, yeah. The technology is there. It can be done, yeah. Just have to convince politicians. God, that's an interesting presentation. Let's see, what do we have in terms of questions? Just looking. Yeah. How are you engaging with the WCO or the WTO in this work as well? Because they have a direct interest. So the one questions came up.
Absolutely, WCO, WTO, UN CFACT, you name it. ISO, we're talking about all of that. But one caveat is don't try and standardize too soon, because I'm not sure we know what to standardize just now. Mm-hmm. I know there are some reusable ones out there, which are great for data formats and whatnot, and the alignment with international customs process is led to we've got to standardize one way or another without really knowing where those standards need to be applied. I'm doing some work with Jeff Spiano, who, for example, with the Global Blockchain Business Council, to see if we can target the standardization urge a little bit better and find out where those standards can impact most, and then in a flexible way, doesn't become a choice between WTO and UN CFACT. They can all interoperate.
Yeah, I think that's come up again. Again this afternoon is the interoperability is actually a key thing here, and that links into this whole question, I think, of the open platforms. Yes, it's not always easy to achieve, but it's worthwhile trying for. I don't see any other questions on the chat. So will that, Nick, look, thanks very much. I'm sure you're going to get people to come back to you and take up your offer. Again, if you give us something, we'll put it on the website so people can pick that up and then be contacting you. With that, we move on. We're a little behind time, but we're probably going to go on for about 5 minutes beyond the 5:30 deadline. So, because I do want to have enough time for the next two presentations. So here we move to the withholding tax issues. I said Marley's was unable to join us because she wasn't feeling very well, but John and Ivan are there, and I'm sure they're going to take us through. And what I like about this presentation is something that Vienna's been involved with, in fact, with the EY, with a group of financial institutions and a number of tax administrations, is it actually shows the potential of blockchain to make real savings, yes? Real savings. John, you're going to kick us off then?
Yeah, Jeffrey, how much time would you like us to have?
About 10 minutes, if you can do it, 10, 12 minutes, yeah.
Good enough, thank you. And thanks to all for inviting us to participate in this. So today we're going to be talking about a system for being able to manage the issues related to global withholding tax. And in particular, we're looking at dividends on cross-border dividends on securities. And We have experimented now and demonstrated in a multi-stakeholder demonstration that involved both multiple governments and multiple industry players, this platform. So I'm just going to give you some description as to how it works and what are we trying to do here. And the best place to start with is, well, what's the problem? And the problem and who are the stakeholders is really important to understand before we delve into any of the technology of the solution. So we see there's three major parties that you need, if you're going to have a system that really works, you need to solve to meet the issues of all three parties. So at the bottom of the screen there, you see the investors. And the investors, their critical issue is that they're, in many cases, paying either more withholding tax than they actually are legally responsible for. And also, let's say that they are able to get the lower rate. Quite often, they have to go through a very onerous reclaims process. And that reclaims process is very paper-driven. It takes a lot of time. So there's the whole time value of money associated with that. So what do these investors really want? The investors really want relief at source. And to be able to have relief at its source, they need to be able to provide the documentation to do that. So then you look over to the next side and you look at the governments. Well, governments actually have a big problem with the reclaim system too, because it's so paper-driven. It's a real opportunity for fraud. And so the governments are faced with a system that not only is inefficient, but has been shown to be very, very prone to having fraud happen. So governments are looking for a solution to that. When governments are told, oh, you should just provide relief at source, often their reaction is, no, we actually want more documentation. We want more paper. So you've got that issue there. And then finally, you have the financial intermediaries. And what's their issues there? They're dealing with this paper-based problem. Some of the larger global custodians have 400 or plus employees just driving this system. You've got literally airplanes full of paper flying from country to country. And when COVID hit, there had to be an immediate emergency solution because there was nobody to fill out the paper, nobody to read the paper or stamp it. And I think it just brings home the problem, what happened with COVID big time in terms of what are the issues. So if you're going to have to try to solve this problem, we think it's critically important that you solve it for all three of these major stakeholders and not just one, not just two. It really has to address them all. So what do we think, in terms of this problem? I'm just going to flash this one up. We know this is a big problem. It's been measured in a whole bunch of ways. No matter how you measure it, you're talking about billions. So what do you do about this problem? We think that blockchain provides a really interesting opportunity to be able to address this problem, which has been around now for decades. And there's been various attempts to solve it, and really none of them have come through yet. So what does blockchain get you? It gets you that near real-time sharing of data. But even more important, once you have that, is that if you do it right, you can have a lot of mitigation of the tax fraud. And that's just super important because now the tax authorities have automated access, direct access. They can see what's going on, and they can see it not a year later, not 5 years later. they're seeing it as the dividends are being processed. So we think that by resolving all of these problems, that you do now make it technically possible to offer relief at source as an option and to really expand how much relief at source is available. And we think that when you add those together, you finally do come up with a real resolution to this withholding tax challenge. And we think that this is something that we've now demonstrated, shown how it works. There's clearly things to be done, and Ivan's going to be talking about some of the issues. But from a technology viewpoint, the general consensus amongst all these participants was that indeed this looks, promising as a way of making it happen. So how does it work technically? Blockchain is the foundation of this, okay? And blockchain is really important because it does provide that central basis for coordination, the ability for the parties to trust each other. But we think that blockchain is not sufficient, okay? It's necessary but not sufficient. And what are some of the issues? Well, with blockchain, normally, the good and bad of blockchain is that everybody has visibility into all transactions. But, in the world of withholding tax, in the world of a lot of these applications, there's a key issues of both individual privacy and also commercial confidentiality. So one of the key aspects of this system is that we layered onto this system something called zero knowledge proof technology. It's a very, high-end cryptographic techniques. What it does, it's almost, magic when you think about it, but it does work, and we proved that it works. And what it does is it says for any given transaction, only the two parties that are involved in it actually have visibility into that transaction. Everyone else knows the transaction happened, but they don't know who transacted and how it was transacted. And yet, based on zero knowledge proofs, they have the cryptographic assurance that any subsequent transaction they rely on, they can verify the prior transaction against the blockchain and know that it's been done correctly. So you have this really, really interesting balance of having the trust and transparency of blockchain, and yet you are preserving the commercial confidentiality and the privacy. So as part and parcel of that, part of the whole the philosophy that we have is keep as much data as possible off the blockchain, okay? And instead keep it with the systems that already have their data. And then you still, though, will need to be able to share private data. So the final piece of this system is that we have this mesh of point-to-point connections across each of the parties. And that mesh of connections is where all the private data is exchanged. And yet, because we're recording it on the blockchain with hashes, you can correspond and know that the data that you're given privately, you can validate was the same data that they declared on the blockchain. So those are the pieces.
I think we're going to move on to Ivan, the legal 2-3 minutes maximum, Ivan, if you can, yeah.
All right, I'll do it in 3. Thank you, John. Now I would spend the remaining 2 to 3 minutes talking about some of the structural legal challenges that we came across in relation to blockchain when deployed in an international tax context. As John just explained, the blockchain system envisages a secure messaging possibility between a private party in one country and the tax authorities of another country. Usually, this would be the financial institution of the investor in the resident state and the tax authorities in the source state. Under the existing international tax system, however, cross-border exchange of information occurs only between the authorities of different countries. Why is that? Not to make the implementation of blockchain more difficult, but because when the information flows between authorities, each requested authority can make sure that sufficient safeguard exists in the other country once the information is exchanged. For instance, maybe it's not such a good idea to share information that would be used for persecuting a political opponent or would be leaked to the public. The decision to exchange information is also subject to judicial review, therefore. When a private party cooperates directly with the foreign authorities, no longer such check can be performed, and in this lies the first structural legal issue. And if we can move on to the last slide, John. The second issue that I want to address relates to setting our expectations right when planning a blockchain solution to a legal problem. If the law operated based on a simple if-then algorithm, then the blockchain indeed would have been the theory of everything together with smart contracts. However, there are matters of legal interpretation that are and would remain in the gray area of no right or wrong answer. A classic example of such an area would be the treatment of beneficial ownership, to which different countries apply different interpretations. In a cross-border scenario, for instance, which country's definition should we apply? And what do we do when the legal responsibility, when the wrong definition is applied? There is no easy answer to these questions. However, this is not to be understood as saying that the blockchain has no positive effect also on these gray areas. First, it lifts a lot of the compliance off the plate so that we can focus on what matters. And second, it provides real-time data to work with. In this presentation, I outlined two structural legal challenges. First, the need for safeguards, and second, the inherent ambiguity of the law. Among others, these legal challenges would be part of nearly any use case of blockchain in international tax law. And there are many use cases, as we mentioned some of them already today: transfer pricing, VAT, economic substance requirements, I would add as examples. So the future is exciting also for the lawyers in this audience. And I hope I made it in 3 minutes, and I conclude my presentation with this.
You did it well, yeah. It always, saying that it's exciting for lawyers, that worries me. If it's exciting for lawyers, tax people think, in what sense does that mean, yeah? So, good. Let's see, what have we got in terms of questions here? I'm just looking at the chat show here. Yeah, I mean, how do you ensure that you get the right balance between the rights of taxpayers and confidentiality and the need for the tax administration to have access to information? Maybe, John, you want to take that one, yeah? I think you already mentioned it a little bit.
Yeah, we think that's incredibly important part of this. That's why we have the blockchain foundation, but layering on the zero knowledge proofs, layering on all those private, point-to-point channels, we think that's critical. And as we talk to, the different participants in this pilot that we recently concluded, we think it really does tip the balance. That blockchain alone isn't enough, but having the privacy and the safeguards built in is critical to making this work. There's still lots of work to be done. There's still other security issues, but that's fundamental, we think, is the privacy.
I think what participants would be interested if you can give us a short document on this zero knowledge proof concept, yeah, because it's not in the tax world. It's not well known, but from what you've told me in the past, I think it really is a key thing here. Let's see. Danielle, did you have a question, or I see you smiling there?
No, it's okay. It's okay. Thanks.
Zero knowledge proof. Let me see. There was one other question. I think was that's an interesting one. It's from a European, yeah, and it's really asking: will this system work best in regional blocks like the European Union? Yeah, is this something that the Union could use, in fact, to achieve a more effective single capital markets within the Union?
If I can just say a few words on that, I think this is exactly the first use case we should be thinking about, also in light of the safeguards that I have just mentioned. So some of the issues that can potentially arise will maybe arise much less in a system of a regional block where there is a mutual trust that we all adhere to a sufficient minimum standard. So we will be able to do this point-to-point communication and at the same time sleep tight at night. So maybe this is a first and not a bad idea as a initial step for implementation for this reason.
I'm sure. Well, I think there's some people from the Commission on the line, so I'm sure they'll be able to comment on that. Yeah. Look, again, thank you, in fact, both John and Ivan for that presentation. I think this is a good example of bringing together all the key actors, the financial sector, the advisory sector, the academic sector, plus the tax administrations, yes? And actually trying to come up with a practical example that works. And of course, if it does work in this area, then I can see that countries will be probably more open to using blockchain in other areas as well. So thank you very much for that presentation. And again, I think maybe there's some material we can put on the website afterwards, because I know there's some things that are coming out in the next few weeks. So thanks again. We move on then to our last, but certainly not the least of our presentations, and that's from my teacher, David. Yeah. And he's going to talk about what are the implications of the spread of central bank digital currencies for tax, the tax environment. Yeah, how's that going to change things? David, over to you. Yeah.
Thank you, Jeffrey.
And about 10 minutes, if that's okay. Yeah.
Okay, great. And thank you, Daniel and Revenu Québec, for hosting this and allowing me the opportunity to speak. I will move with all expediency because I know we're going to push the time limit a little bit.
We have 10 more minutes after you finish, so it's okay. Yeah.
Okay. So as everyone's aware, there's a battle for the definition of money in the future. Definitely our world is going digital. Central bank digital currencies are rapidly advancing. There's also the private digital currencies that are making inroads, and those are competing. We just saw El Salvador recognize Bitcoin just this week as a currency. So there are a lot of different changes going on. Is that an opportunity for tax? I believe it is, and I want to make the case for why. So if we look at central bank digital currencies, it's really covering the globe. This is a BIS study that was done back in mid-2020, so the numbers are higher. But you can see that the majority of central banks in the world, somewhere around 84-85% of them, are exploring central bank digital currencies. What do we mean when we say central bank digital currencies? Well, there's different types. So what we're really talking about from a tax perspective is the publicly issued currencies that are digital, that are retail. There's also wholesale. So you see to the right of it, wholesale. So a retail CDBC is issued for the general public. This is the Bahama Sand Dollar, which was issued, I just heard their finance minister speak. Really, their goal was financial inclusion. The Chinese DCEP, digital currency electronic payment. They have much broader goals, but these are both retail central bank digital currencies. There are also wholesale central bank digital currencies. And then there are other special purpose digital currencies. Now that's very different than the privately issued digital currencies. So this includes, everyone knows the cryptocurrencies. This includes a subclass of cryptocurrencies known as stablecoins, which are cryptocurrencies pegged to an underlying basis, usually another currency like the USD. And then these are, interestingly enough, the digital currencies requiring mandated backing. That's what we think of as money today for the most part. Mm-hmm. Other than the bills, at least in the US, other than the bills you carry in your pocket, these currencies are not a liability of the Federal Reserve. They are issued by banks. So that's your bank account. That's the majority of the money right now in most countries. So that's actually a private currency. Okay, so just to make the distinction here. So retail central bank digital currencies, I believe, is a key for tax moving forward. Let's talk about why. All right, so there's different types, and they're both wholesale and retail. Retail is the dominant type. As you can see, the wholesale is a very small focus of work. The general purpose on the left-hand side is a much higher majority, and both fills out the rest of the chart. And then on the type of work, you can see that even back in mid-2020 or early 2020 when this survey was done, there was a significant amount, up to 15% of governments were in development and pilot arrangements around these. So this is happening today. It's timely for us to get involved as a tax community. In order to understand how to get involved, let's take a look at currently how things happen in payments Right now, there's two different banks involved, the consumer's bank and the merchant's bank. And when a consumer makes a purchase from a merchant, the banks interact with each other. The payment travels through a credit card network, for example, and there's an approval from the acquiring bank. And then down the road, there's an exchange, a settlement. Often 2 to 3 days later, the banks will finalize the transaction, clear the transactions off their books. How does this change with the central bank digital currency? Well, there's many different architectures, but one of the primary architectures is called a hybrid CDBC architecture. And essentially, every citizen and every merchant gets an account. So you get an identity and account, and the central bank hosts those accounts directly. Now, they don't, the central banks don't do customer service really well, so there are intermediaries, but essentially you are now holding a direct liability of the central bank. And what's really important is the information flow from a tax perspective. So now we've got information flowing for the first time into a single point where the information can be acted upon. The ability to act upon it is what differentiates a central bank digital currency from other mechanisms. So you can see right now there are retail fast payment systems available in the world. So, you can clear these transactions very fast. All the other benefits that have been talked about with the blockchain, which, I fully agree with many of the comments today. What differentiates a retail CDBC is that new digital functions line. You can see almost all the other lines are pretty much the same. Okay, potential to add new functions, including programmability and fractionalization, right? For example, machine-to-machine micropayments. Well, it's a programmability that we really care about. So there's often talk about, wow, can we program tax into central bank digital currencies? And I believe we can. And we're actually working on a few projects, very early stage, to take a look at what that might look like. Okay, so let's talk about the range of technical policy options for incorporating tax into CDBCs. Okay, I think we have to put everything on the table. I think we have to look at, the presentations we saw from Goran and others on, data, e-invoicing, that should certainly be in scope. I think we have to look at program logic. I think we need to look at, e-determination of tax. We need to look at e-audit, which we've heard about. We need to look at split payments, which we've seen money flowing in the withholding example, for example. And then finally, we need to think about, is liability in the right place? It's not really liability. I probably misworded this. Is the obligation to remit and collect in the right place in this new digital world, right? And what I mean by that is right now the businesses are an intermediary, right? The tax, the transaction taxes, other taxes are generally owed. And I'm going to get into VAT, so you'll see that this is leading to VAT. But taxes are owed often by the consumer. Yet the business is put in the unenviable role of having to remit and collect with nothing to gain, only paying for them. Okay, there are a couple good taxes for trying this out. One, we believe the best one is the transaction taxes. The VAT, GST, sales and use tax. I think wage taxes are actually a pretty good opportunity as well because of the determination. I don't think income tax, but the actual withholding of wages out of paychecks is probably a pretty good opportunity. Income taxes are definitely.
David, what about digital service taxes? Just to liven things up a little bit.
Well, aren't those going away now, Jeff?
In transition, yes. Go ahead. Sorry to interrupt you, David.
Yeah. So you want transactional tax. I think it was said before, which was a great comment. You don't want a lot of judgment and logic built on top of the tax. Blockchains are transactional systems fundamentally. So you want transactional taxes. Social insurance, another opportunity perhaps, but I'm going to focus in on the transaction tax area. All right. Central bank digital currencies, talking about that may make you think, oh, we can do this only when a central bank digital currency is involved as the payment mechanism. We don't think that's the case. And we actually did we built a pilot and took it out to Singapore, one of the earliest DET seminars for how you can use the blockchain to collect taxes automatically from non-digital transactions. What this means is you should take everything into scope. right? We need to revisit prior work. Let me just give you an example. There was a split payment cost study done in 2017. And what they basically said was, look at this big blue, chunk over here under costs. It's too administratively expensive. It doesn't make sense. Yeah, there's good benefit, billions, half a trillion euro, but there's too much cost. And what's the cost driven by? Well, it was reporting, which blockchain solves. It was setting up bank accounts, all these bank accounts everywhere. And then it was the transaction fees. Well, guess what? All of that goes away. Okay? So not only can you program in for central bank currency initiated payments, we believe this changes the cost dynamics for looking at a global, all payment type split payment regime. Okay, so we've heard about various groups coming together. We've the E&Y Prosperity Coalition or Collaboration, DET. I think these are great. I think the conversation that needs to occur around this is design thinking. First off, we need to come together and think about how this can work. What's the art of the possible? What are the benefits? My time is up. And then we need to engage in the central bank. So if you have a central bank who's engaged in piloting a digital currency, and you probably do, we highly recommend you call your treasury, get an introduction in, and start talking to them about the benefits that real-time collection and remittance, potentially even removing the business from having to do anything, would do for economic development, would do for tax collection in your jurisdiction. Okay, and we believe that we need to come together as a community under one of these DET, E&Y, Prosperity Coalition, and have these dialogues so that we can do this in a standardized way so that the businesses are not getting buffeted from 24 different flavors of how this gets implemented. But thank you. I'll stop there.
David, that's a lovely way to stop. I mean, it sort of reinforces the message that has come consistently out of this afternoon. We need, in fact, cooperation. We need to government engage with business. We need to recognize, in fact, that the more inclusive this process is, the more effective we'll be able to use the blockchain approaches. So I'm afraid we're not going to. I see some questions there, but I'll send them to you so you can answer them afterwards, David, because with the time we're sort of 5 minutes over. So with that. We'll move to the last session, which is just really a wrap up on my part and on the part of Eric. Yeah. So first, just a few comments from me. As I said at the beginning, the aim of this discussion was to convince both business and tax administrations that blockchain is not just a dream, it's becoming a reality. Yeah? And I think all the examples, whether it's from our colleagues in Thailand, whether it's from the EY and the World Bank people, it shows it's happening. Yeah. And it shows David's last presentation of this, this development of central bank digital currencies. I mean, it's speeding up. Things are moving very fast. Yeah? So we must make sure as a tax community that we get on this chain and that we overcome our fear, the fear of the unknown. Yeah. And that requires, I think, a lot of work on the part of both practitioners and academic to provide more information that's out there. Yeah, but I'm convinced, in fact, that these technologies, and it is a package of technologies, blockchain plus AI, machine learning, that package, in fact, can be very powerful in helping tax administrations do their job more effectively, in counteracting tax evasion, tax fraud, in providing more service, in fact, on the part of the tax administration to the taxpayer, and also in fighting illicit financial flows. So, but to get those benefits, it's essential that we have a shared journey. Yeah. That is a shared journey between government and between businesses. And to do that, I think we need to have trust in each other. And we just see that this is a win-win. This is not the usual tax situation. You win, I lose. In fact, this is one where the taxpayer can win and governments can win as well. Yeah. And certainly, I think the way forward is still doing more pilot studies, and we'll be very happy in the DET to facilitate that. Some of the things I think that we'll try to do quite quickly, because there's been a number of requests coming through on the on the chat show. So just to answer some of the questions that were put to us, will the slides be all available? I think I'm correct in saying, in fact, all the PowerPoint slides are now on the website. There's also a bibliography, and we would love if people could add to that. And the evaluation questionnaire is on the website as well. So you can get all the information that you need on the website. Secondly, we will try to do a non-attributable summary of the main points that will come out. And perhaps also we'll do a video of the whole conference so that you can actually have that and share it with your colleagues, for those that couldn't join you, yes? It's been interesting that throughout the afternoon there's been a number of offers of come and join us, yes? We heard, in fact, from myself on the DET, come and join and work with us on the Digital Economy Tax Network. Robert, in fact, encouraging to participate in the what he called the Tax Radar project, which is exciting. We heard Jeff and Dennis, in fact, promoting the EY MIT World Bank Network, and then we need Nick Davis and Hmrc promoting the whole trade utility approaches. And as I said, I've asked these different organizations to send us information on those networks so that you can just go to one place and you can get them and you can decide which is for you, yes? So that's good news. Just a few words on some events that are coming up over the next few months. We will have an event on the 15th of July. This will be in the context of our project on tax and good governance in Africa. And one session that's on the 15th, in fact, will focus on the use of new technologies to counter illicit financial flows. So you're very welcome to participate in that. Robert will have a session on the 13th of September, which will continue the debate on blockchain. And he will be very open, in fact, to anybody participating in that. On the 25th of October, we'll have a joint World Bank, EY, DET seminar on looking at blockchain and other techniques that are used to bring tax compliance into real-time compliance. So that's an interesting event. And then on the 13th and 14th of December, we will have I hope a physical meeting in Vienna. Now, it depends on COVID, whether it comes back to the 5th wave, the 6th wave, or whether it just disappears. But at the moment, we are planning to have a meeting, in fact, on the 13th and 14th of December on the whole issue of new technologies and VAT, yeah? Because you've seen that over this afternoon, that's been a sort of a recurring theme. These technologies are perhaps well adapted to VAT. So lots of events happening. All those dates are on our website. You can get them as well, yeah? The last thing I'd say, I do have to thank, not that I do have to, I want to thank Danielle and Eric and all the colleagues in Quebec Revenue. You've done a great organization. Sonobrick, the company that you engaged, has been very patient in dealing with people that don't understand quite how to move slides around, yeah? So that's, I think we can give them a clap there, yeah? Very much appreciated that. It's been a very smooth operating conference. And in fact, I think it's set a good precedent for the June meeting that we will have in Quebec, which, whatever happens to COVID, is going to be physical. I need to come back to Quebec. It's been too long since I was there, yeah? So with that, and I also want to thank my colleagues, yes? Mustn't forget, particularly Hmrc. I don't know whether Hmrc is still on. Yes, I can see she's on. She's done a great job, in fact, in coordinating all of this. Ivan and my other colleagues, researchers as well, have helped in this process. It's been a very collective process, yes? So with that, I'll pass back, in fact, to Eric, who will have the last word, perhaps on why should we come to Quebec, yeah? Do you want to say a few words about that?
Laisse la parole, finalement, Jeffrey. Well, I'd like to thank every one of you, especially I have learned a lot this afternoon, and I have discovered great speakers, and as a very, very good animator. Jeffrey, you were once again the king of the animation. And I'd like to thank Maud, Mario, Sami, Elmira, and Eric, and all the people that made it possible. Fait que merci tout le monde, ça a été vraiment extraordinaire. And we hope to see many of you in Quebec City next year. It's a very lovely city, European touch in North America. And we hope we will be there to make you discover it. And as I am leaving Revenu Québec in 2 weeks, and Eric is taking my place, I hope I will be invited to the event.
I think, Eric, should we invite him or not? Yeah, we'll invite you. Yeah, we'll invite you.
I will certainly go. So thanks a lot, everyone. C'était formidable, une très belle journée. Merci beaucoup. Au revoir.
Merci beaucoup, Daniel. So take care, stay safe. think of tax, think of blockchain, make the connections, make the linkages, and let's be open. Yeah. Thanks everybody for being patient. And I do apologize that we are 12 minutes over time. Yep. Sorry about that. Thanks again. Take care, everybody. Bye-bye.